Greetings and salutations. Welcome yet to another deep dive. We're doing it live training here at the Dig Agency. It's your humble correspondent, David Duford, also known as El Jefe. It's a pleasure to have you guys here. The purpose of today's deep dive training is to go deep into the world of final expense telesales. In fact, I have titled today's talk, The Official Guide to Final Expense Telesales, A to Z Guide for Beginners. So really, this stream and eventually this recording, you can, by the way, watch this later at any point that you want to, is specifically made really for those people who are just considering getting into the final expense telesales business, or maybe already just started getting into the final expense telesales business. And the purpose of this is really to serve as a resource for those of you out there, again, who are thinking about getting in or who are new and are looking for guidance. So the idea behind this was I tried to take a walk down memory lane as a new agent back in 2011 when I got started in final expense, and thought about, well, all the things that would be of concern to a new agent and what they need to know, which many of you are ignorant of as a new agent. Just while you're new, you're learning, and provided in some sort of convenient training to help you decide, A, if final expense is for you, and B, if final expense telesales is for you. So really, that is the drive and the purpose of today's training, which is really to send you in the right direction from very basic stuff all the way deep into the final expense telesales presentation script and beyond, to give you the basic training that you need to be successful in final expense telesales. This also is going to serve, incidentally, as essentially a foundation to a new book that I'm going to be putting out, titled the same as this video, hopefully in the next 6 to 12 months. Now, as we go into this, a lot of today's training is going to be professionalized. I had a slideshow created. I think we've got like 150 plus slides, not including the script that we're going to be reviewing. But I'm going to take, for those of you watching this live in the recording of this, your questions at the different intermissions or intervals between the different subject matter that we go through. So there'll be opportunity for you to ask questions. As I'm going through the slides, I can't see the chat, but I will promise to get to those questions once I end each section, and I'll be happy to address your questions between each topic or each point of presentation. How long are we going to be here? I don't know for sure. Probably 2 to 4 hours is what I'm saying conservatively. I don't think we'll go any longer than 4 hours. 2 hours is probably a little on the short side, so somewhere in the middle is probably what to expect. And of course, like I said, if you're wanting to watch us live, you will absolutely be able to watch us live. Just come back to this, use the same link that you got here with, and then you can go watch the recording. So it's pretty convenient like that, okay? So getting started, let me go ahead and pull up my presentation here. I'm going to switch a few things, so it might look a little wonky. So bear with me here as I get my camera angle set up. I got to get a filter on OBS set up so that it is set up correctly. So just bear with me. 10 seconds, please. And then we'll be good to go. Okay. I think that's it. Nope. That ain't it. Oh, I know what I did wrong. Okay. I got to go back to my camera and do that. Sorry, guys. That's what I did wrong. Okay. All right. Get the circle. Where's the circle? Let's get the alpha. Boom. Perfect. All right. So now you should be able to see me down here in the corner. And then I'm going to pull up my spread or my presentation here, and we're going to jump right in. All right. So let me turn my cell. Where's my cell phone? Turn that off here so that doesn't distract us. Give me 1 second, guys. All right. I think we're ready. And then I'll close down a couple other things here, like my schedule and my drive, and we should be ready. Okay, let's go. Okay, welcome to the official guide to final expense telesales. It's a pleasure to guys have you on here. Let me stop that one more time. Sorry, this is going to drive me crazy. This subtitle is on here. I don't know why that's there. All right, let me get this off here. See, this is what happens, guys, when you do things live, and You are not 100% prepared. Okay, now we're ready. All right. So greetings and salutations. Welcome again to the official guide to final expense telesales. My name is David Duford, owner of the Dig Agency. It's a pleasure to have you here today. What we're going to be talking about. Whoops, do I have everything on? Okay. All right, it's on. I just want to make sure. Sorry. I've done live streams before where I didn't even have myself muted, or I had myself unmuted the whole time, and it was terrible. So, okay, I think this will work. Now we can go. All right. Now, let's do it again. Third time's the charm. Greetings and salutations. David Duford here, owner of the Dig Agency. Welcome to our presentation on the official guide to final expense telesales. It's a pleasure to have you here watching live or the recording of this video. The purpose of today's training is to give you the A to Z on everything that it takes to be successful selling final expense over the phone or remotely. We're going to go through everything that you could ever want to know about selling final expense. We're going to talk to you about the basics of final expense, talk to you about things you need to know to get started, all the way down to how to work our $1 million a month script that we have our agents using that is making $1 million in production every single month. So if you're interested in selling final expense successfully over the phone, whether you're thinking about getting into the business or you're brand new or experienced and looking for those golden nuggets, this training is for you. So let's jump right in. So let's talk about the topics to begin with today. First of all, number one, we're going to talk about the basics of final expense and why we love doing it. Again, I'm assuming that some of you in the audience today may not know much about final expense, and I don't want to assume that much. So we're going to talk in the beginning about the basics of final expense, how it works, what you need to know, what makes it different from the other opportunities out there, and why we love selling it, and why that's our focus here at the Dig Agency. We're also going to talk about the short and the long-term opportunity of selling final expense over the phone, what factors in the short term over the next couple of years I think are beneficial to the business model, but also what factors are beneficial over the next 20 years, and why final expense is here to stay, and why it's one of the safest business models to be in relative to others that are out there. We'll go into more detail in a minute. We're also going to talk about how the money works selling final expense. If you're new and you're like, well, how do I make money? How do I determine my commission? What do I need to know about the speed at which I get paid? We're going to cover all of that later today. We're also going to walk through a day in the life of a final expense telesales agent. Many agents who are new to the business or are thinking about the business wonder, well, how do you actually sell this stuff? What does a day look like? How do I make calls, text messages? What can I expect working through the day? So we're going to explain that briefly as far as what to expect. We're going to give you 16 reasons why selling final expense remotely is awesome. While we have shifted our business model at the Dig Agency to almost all completely go in the direction of final expense telesales. We still do some face-to-face business, but we're going to talk about why we love the telesales model. We're also going to give you some straight talk, and this actually came from an existing agent of mine. He said, Dave, you can't do a talk like this without telling people why it may not be a good idea to sell final expense. So we want to show you both sides of the coin, and we're going to talk about in specifics why selling final expense is not a good idea for some of you watching this. We don't want you to waste your time or money if this business model isn't a good fit. So we're going to talk about the good, not only the good, but the bad too, because all businesses have good and they have bad. We're going to talk about the steps to getting started on the right foot, from the pre-licensing to licensing process, and then go into a detailed conversation about the strategic considerations to make as a new final expense agent. And how I mean by that is, how do you pick the right agency? What factors and things should you be concerned about that are very, very important when making a selection? There's a huge failure rate in this business. Some say it's 92%. I think it's closer to 95% within the first year. And we want to make sure you're not another statistic for failure. We're going to also talk about what top producers do to become sales ready within 14 days. I've surveyed my top producers at the Dig Agency who sell final expense over the phone, and I asked them over the course of doing case studies and having conversations, what did they do to get prepared as much as possible to be ready before they got on the phone and started selling. There are things that you need to do in order to maximize your success selling final expense and preparing to do so. We're going to talk about those. We're going to talk about final expense lead generation, the basics, what leads are good, what leads are bad, and what leads you should stay away from. And we're going to talk about all of those because the lifeblood of your business as a final expense telesales agent is leads. You have to have leads in this business, and they're the kind that are either provided for free or that you buy. And we're going to go into detail about what is working now in the final expense lead space. We're going to review, again, our $1 million a month final expense telesales script. We are literally making $1 million in annualized premium sales every single month using the script that we're going to show you today. We're going to show you it on the screen. We're going to give you a link later on where you can download it and then use it yourself. It's literally the same exact script that we're using right now. And we like giving stuff away, so you get that as our way of saying thank you for watching today's broadcast. And then we're going to put it all together and give you the blueprint for success, kind of rounding out the conversation today on what it takes to be successful selling final expense. And there's an added bullet point I didn't add in here, but we're going to include at the very end a glossary of common terms that agents and agencies use that you may see shared with you or on other forums, and to make sure that you know what they mean, like IMO, FMO, DE, FE, MA, all these words. And then also define some things that maybe we didn't cover earlier today and what their meanings are, like what's an advance commission, what's a chargeback, what's secured debt, what's unsecured debt. These are all very important things you should know, so we'll definitely spend some time covering them. There. Perfect. Sound good so far, everybody? Hope so. Let's continue. So before we get into this, I want to do a check with the live crew here. If you're watching a recording, just so you can jump back. I just want to make sure everything is working. Can you guys out there give me a thumbs up or comment? I know you're kind of seeing a weird looking screen. Everything looking good here on the screen? I know I bounced out of it, but everything looks good on my side. Everybody seeing everything okay? I'm just going to assume so because I've just popped out of my screen and it looked like everything was good. So just comment in the chat if it's looking good. Not the circle screen, but everything else looking good. I assume so. I don't see any complaints. So I'm going to safely presume that we're good. Okay, thank you guys. I appreciate it. So 134 lives. Nice to have you guys here. Welcome. So let's go back to the presentation. Thank you guys. I appreciate your help on that. Okay, so let's go back here. Excuse me. Okay. So, like I said, we're going to start our presentation today talking about the basics of final expense and really why we love telesales. We're not going to presume getting started that you know much about this business. Some of you will already know some of this who are experienced to some extent, but we're really speaking to the new people out there. So pay attention if you're new to this business or thinking about getting to this business. We're going to give you a lot of information about what final expense is and how it works and why we love it. So let's get started right away. So what is final expense? Pretty simple. Final expense is life insurance to cover burial and cremation costs. Now, a couple of things people think about, like, do you have to have the life insurance final expense plan go to a funeral home? No. The way a final expense plan works is very simple. When the insured person, that's the person that you wrote the policy on, dies, then the beneficiary, that's the person who gets the money when that person dies, can do whatever they want with it. I always used to joke with my clients that, hey, you can get this policy on yourself and give it to your kid, and they can do whatever they want with it. They want to go blow the money and go on a trip to Hawaii and, put you up in the morgue and keep you on ice for a while. That's fine. And that's true, possibly. I mean, most of the time, kids love their parents enough to, put them away properly. But the point is, final expense is money into the hands of a beneficiary, typically a loved one or a family member. But its purpose, the way that we package it, it is life insurance. Its purpose is to pay for anything related to final expenses, the funerals, the cemetery costs, the cremation, if that's what they do, any last bills. That's why we call it final expenses, because that is all encompassing in all of that stuff. Now we're going to get into more definitions a little bit further here on what makes final expense unique from maybe some other aspects of different life insurance. So let's get right into that. So first of all, final expense is a simplified issue product. Okay, so what simplified issue product means is that you don't have to go through a rigorous medical exam. You do not have to take blood, pee in a cup, or any of those things that you would find normally with what we call fully underwritten business. Instead, at the presentation, when you sit down with your final expense prospect, all you have to do is make a phone call. Sometimes you don't even have to talk to anybody. You submit the application electronically, and it pulls information from what's called the Medical Information Bureau, which has a history of everybody's insurance claims on a health insurance basis. according to their social security number, as well as what's called the prescription check, to check what prescriptions have been filled, to then determine insurability to see if this client that you're sitting with, this prospect, can actually get approved for the policy that you're applying for. Now, why is this good? And so in other words, this is an instant decision on the first call. This is how it should be ideally. Some carriers, not so much. We try to stay away from those. Ideally, you want to sell a policy with an instant decision. Now, why does this matter? Because in the game of final expense, this is a volume play. You're dealing with a clientele that tends to be fickle. They want answers and results immediately. And with a final expense product, incidentally, because it's simplified issue, you can get those results immediately and thus sign up and get closed a lot more of your clients than you would find with other products that may take weeks, sometimes even months, to get an approval for. Okay? Now, continuing on, and also it has benefits, as we'll get into, as far as how your pay works and how frequently you make money, etc. Also, no medical exam necessary, covered that. And it's flexible underwriting. This is another big thing that you'll find that sometimes is difficult with your more fully underwritten products. So with final expense, because it is simplified issue, it tends to afford more flexible underwriting than what you would find with a non-medical or a fully underwritten type of plan that you would see with like term insurance or other types of products. So incidentally, a lot of our clients in the final expense business are older. They typically are on Social Security. They're retired or disabled, and they come with a litany of health problems typically and a full box of prescriptions. And many of these other carriers that require more rigorous underwriting aren't going to get those clients qualified. They're too much of a risk intrinsically. This is not the case with final expense. You'll find with many final expense carriers, the underwriting is very flexible, with some carriers not doing any underwriting, doing what's called guaranteed issue. So as long as their age is appropriate at the time of the sale, they will get approved no matter what their health is. So what does that mean and why should you care? Well, in the world of selling insurance, you have to deal with what we call the business prevention department. Those of you who sell insurance know what I'm talking about. It's called the underwriting department. You may have somebody who's ready to throw a lot of money at you, but boy, if you can't get the person approved, you're not going to make the sale. With final expense, you have a much lower hurdle to jump over to get a client approved, and thus you'll make more sales because of it than if you were in a business where you're selling a fully underwritten product to the same person. Does that make sense, guys? So these are reasons getting started, I think, that makes final expense in some ways a superior product. It's not perfect. We'll get into that for sure. But this is a salesman's product as we get into this a little bit further. It's also a whole life insurance product. Now, I know there's people out there like Dave Ramsey who thinks whole life sucks across the board, but my hope is as I explain this to you, you'll see why in this case at least, with the product we're selling and the people we're selling to, it is the perfect product, even though it's not term life insurance, which is some people think is superior. We call those termites, by the way. Joke intended. Rates can never go up. So here's how whole life insurance works. Let me actually tell you, if you don't even know what whole life means, the best way to think about it is it lasts your whole life till the day you die. And there's some other factors or benefits with it that are useful too. So first of all, the rates can never go up. So with a whole life insurance plan, the benefit of talking to a senior citizen is that, hey, this $50 a month premium you're going to buy, it's never going to increase for any reason whatsoever. It is as certain as the sunrise. It's in our script. And the benefit is, well, our clients, our seniors, typically don't get pay raises. So it's going to be harder to accommodate a plan that goes up in price, like a term insurance plan. So people like a consistency of expectation when it comes to prices. They don't like getting gouged because they're lower income, and that's how they're perceived. So whole life is very advantageous in that way. Coverage can never cancel due to age or health. We like that because with these kind of plans, look, it doesn't end at a certain age like term insurance. Again, term, yes, can be cheaper per dollar of coverage, but if the client outlives it, much less is able to qualify for it, which many times can't happen because of the client's bad health, they lose the coverage. So what good is a policy when it's not there to protect you? With a whole life plan, which is what all final expense plans are designed around, as long as the premium payments are made, which never go up, the client can never be canceled due to age or health. So the client knows that they have valuable coverage in place to take care of their final expenses so that their loved ones aren't left burdened and the clients have peace of mind. And with some plans, depending on the client's health, they may qualify for first day full coverage. So what does that mean? That means specifically when the client makes their first premium, if they're eligible, they will be fully covered for what we call the death benefit or the face amount or the amount of money the beneficiary gets when the client dies. So again, it depends on the carriers, it depends on the underwriting qualifications, but in many cases, there are people with diabetes, COPD, lung history issues, histories of cancer, history of heart issues that can easily qualify for first day full coverage, not across the board, but in many cases can, and get coverage on people that they otherwise think they would have never been able to qualify because of their litany of health issues. So all in all, final expenses simplified issue, meaning easy to underwrite and get an approval for, whole life coverage that is designed to last for the entirety of the client's life as long as they pay the premium without a rate increase. So pretty cool. Also, some other benefits of these plans is they have small amounts of coverage. Now, you may be thinking, well, what's the benefit of smaller amounts of coverage? Well, again, this is designed to cover final expenses. If you're going to get cremated, depending on where you're at, it can vary wildly. $1,000 to $5,000 is what a cremation will cost, depending on what added extras you get. A burial can be $7,000 to $25,000, depending on what types of stuff that you get, the type of casket, mausoleum versus a in-ground burial, right? So there's a lot of variables there. But the point is with final expense, the policy sizes are designed around making sure that those policy amounts are covered those kind of expected expenses. This is not a plan to get rich on. You don't buy this plan to then croak and then leave your beneficiary with millions of dollars of coverage. The truth is that these clients of ours, as we'll get into, probably couldn't afford it and probably couldn't qualify for the type of coverage to get them that, although I'm sure there are some that could. The vast majority don't. Again, the bottom line with final expense plans is it covers final expenses, and these smaller face amounts are designed to let that process happen at an affordable rate. So in short, the reason I love final expense and why we heavily market it and why this is all I really talk about is that it's simple. It's simple to understand. I mean, what we've talked about is basically what we sell our clients on. We don't really talk about much else. And it's quick to sell. As you'll see when we talk about our script later on, we get to the close in 15 minutes or less, guys. I mean, like, it's not hard to understand. It's a quick and simple sale. It's easy to explain to our clients. It's not complicated like Medicare is or maybe an annuity. And it's the perfect salesman's product. So the type of agent that performs well with final expense is a hard worker. They're a rinse and repeat type of person. They like the idea of picking up the phone or getting on a dialer and just dialing and then pitching and either closing it or not and then moving on and doing it again with very minimal service work. Really haven't gotten to that yet, but there's very minimal service work with final expense that you have to worry about. So that's why we love it. So let me take some questions here from the audience real quick. So I'll pop off here and then jump over here. So if you got questions, go ahead and feel free to ask them away. I'll be happy to take your questions. Looks like the video looks good. Awesome. Man, it's looking great. Cool. So any questions about just basics of final expense for those of you who are watching live? Again, thank you so much for the feedback and making sure that everything sounds good on our side. I'll just take a second here. There's like a 15-second delay on the live versus what you guys see on the video. So I'll just take a few seconds here, maybe about another 30 seconds. Questions about anything, basics on final expense, the product, how it works, etc. Yeah. Hey, Sandra, how you doing? Can a young person take final expense? Absolutely. We've actually this week been getting a litany of younger people with health problems through our ads. We don't want that necessarily. You want a little older population for a better premium size. But yeah, there's absolutely plans out there that can qualify them. There are plans that start at 0 and go all the way to 85. So even if they're under 50, they may be eligible for a plan. Although if they're healthy, you're probably better off selling them a non-medical plan, like a traditional whole life plan. May not necessarily have to do an exam, but you can get them something for sure. What happens in a nursing home situation or spend down? So typically, what I recommend is in a situation where there's a person who's put in a Medicaid spend down position, if you're concerned about that, then you can assign the owner to a loved one in lieu or in advance of that happening at the time of sale or even after the sale. This is a little bit more advanced planning, but it's something that is worth considering. There are also funeral trusts that you can put in as well that can protect a certain amount. Depending on the state, there's certain amounts that are not collectible by Medicaid. In all the years I've done this, I haven't heard one person, and I know a lot of these people who are on, a lot of our people are on Medicaid, they've died, and I know they've got plans, and I never hear from any of, never, not once, ever, have heard from any of them saying Medicaid clawed back the funeral amount. So I don't think it's really a widespread problem. It's more something that's worthy of thinking about and being afraid of if you don't change the owner to a loved one and not the person who's in a nursing home. But I've never heard where, oh, you know, Grandma Mildred can't get buried because she was on Medicaid and they took all the $10,000 life insurance benefit. It just doesn't happen. So I wouldn't worry about it. How many carriers do you use? We'll get into that more as strategic consideration. So let's just kind of hang on that. Thanks, Vegas Style. Hey, Sandra, can a mom take final expense on their children? They sure can. But if they're of adult age, they have to consent to the purchase. So they otherwise have to say, yes, you can check my health, but you can pay for it. That's completely fine. Any hospital-assisted living issues with underwriting? Yes, if there's health questions, usually that's a knockout, but there are guaranteed issue carriers that will accept that. Yes, there are juvenile coverage too. Like, for example, T, with Mutual of Omaha, there's a children's whole life policy. It's very easy to issue, reasonably priced. It's whole life insurance. So, and you can get that on people who are under the age of, I think it's 17. Best source of FE leads, we'll get to that in the FE leads section. Yeah, there are policies that have child riders for sure. Are there specific hours we can call these leads? We'll get into that a little bit later, CT. T, do you sell owner other than insured policies? Like if a wife wanted to own her husband's policy start, you can set it up that way for sure. You can set up a policy to where the owner is other than the insured, but the insured has to consent with these policies. They can't just be like in prison and then you get a policy on the person in prison. Like they have to sign off on it. I'm trying to think of an extreme example. Or maybe there's a spousal situation where the spouse is just gone and they want to take a policy. Well, you have to find them and they have to agree to it. Child rider on FE? Yeah, for sure. And for the Mutual of Omaha plan, Bert, the children don't have to consent. The grandparent can get the plan as long as they have some basic plans or information on the kid. It's really easy to use. We'll get the leads later. Do you have clients in Spanish? For sure. Maximum age for FE, 89, 90. Recommended carriers for individuals, those are 50. We'll get to those in a little bit. So just hold the carrier questions, just kind of covering the basic stuff. Okay, cool. All right, so let's go back here to the screen. Thank you for the questions. Again, we're going to switch gears here, and we're going to move into, so let me make sure we're good here. Okay, cool. We're going to move now into the short and long-term opportunity section. So let's just go ahead and get this started. Okay, so what we're going to talk about in this section is the short and long-term opportunity of selling final expense over the phone. So if you're new to the business or thinking about getting into the business and you want some facts and some perspective, and in my opinion too, on why I think final expense, specifically telesales, is here to stay for decades and why it's a safe play versus some other products like Medicare, maybe you're looking at that, or ACA, then this video is for you. We're going to give you what I feel are the strong factors as to why this business, a final expense, is a great one to be in. So let's talk first about the short-term opportunity. So first of all, this is why I like this, especially if you're new to the insurance business. It's not a technical sale to sell final expense over the phone. It really just takes a couple of days to learn and to understand. It's pretty simple. You've got a very short script that gets done in 15 minutes or less from start to close that you've got to learn. You got a few carriers you have to learn if you work with us. Maybe it's one if you work with a captive company. And you just have to learn their underwriting. And then at that point, it's really just get on the phone and start talking to people. Do your script, have some work ethic, and then follow through and be open-minded to getting constructive criticism to succeed. And again, the nice thing about that is that unlike other products, I can think first that comes to mind is Medicare. Medicare, you have to take your AHIP exam, which is very detailed. You have to pass with a 90%. Then you've got to know all the carriers in each state and what their availability is. and then test and get certified for each of those carriers, and then renew all of that stuff on a yearly basis. There's a lot more of a technical side of selling Medicare that is required before you even sell the first policy. It may take you months sometimes to get up and running with Medicare, whereas with final expense, if you actually work hard, it's a matter of days, if not weeks, to get started. And it's a rinse and repeat product because of that. Again, because it's not, and this can be like a pro and a con. This isn't a product where there's a lot of creativity. People who have a desire to have a creative side to them will struggle with this. My advice is find a hobby outside of final expense telesales to keep yourself occupied and your brain occupied specifically. But if you like the idea of just going in and doing the same thing over and over and over again with very little variation, that's what makes final expense very unique. And I find that most people like that more than having something that changes constantly, because there's a sense of certainty that comes from it. You're selling the same group of carriers. You're talking to the same socioeconomic background type of client. You get to know how they operate and what they think and their perspectives. And the process of selling is the same. You sit down at your home, you get on your headset, and you start dialing and rinsing and repeating over and over again. It's definitely a benefit. Also, there's a low barrier to entry. Now, what I mean by this, to sell final expense is simple. All you need is a life insurance license. That's not that difficult to pass and to get. In most states, you just need a 70% to pass. You need to carry general liability coverage, which is $150 down, roughly $40 a month, and then get appointed by some carriers with an agency you join, and you're in business. You don't even necessarily need to have money to buy leads, because there's programs like our free lead program where we'll provide the leads for you at no cost. Granted, there are some programs that will make you buy leads, and if you go that route, commission tends to be a little higher. But it is something that it just doesn't take a lot of preparation, unlike other products, to be ready to sell. So you can quickly get started and get up and running selling final expense compared to a lot of other products that are out there. And it's also very remote friendly. Again, this is the big shift that we've seen since COVID started. It totally upended the traditional final expense face-to-face model, which is just like you think. You sit down with your client in their home to sell them in person. That's what I did for many years as a face-to-face agent in the 2010s. But with COVID, there were states that were shut down, and there was a ton of pressure on the carriers to update their application processes so that they would allow agents to sell over the phone. Fast forward now 4 years later, most carriers now are telesales friendly. You can, generally speaking, with many of the carriers, sell wherever you want as long as you have a non-resident license in the state that you're selling into. So where your clients are at, you got to be licensed in there. But there's a level of freedom that you can have where you can sell really wherever you want to and have more of that digital nomad type of style to your business if you want to. And the other thing about it is that this business is telesales friendly, not Zoom focused. So some people think, oh, it's remote, we'll get on Zoom and talk to Mildred. And I say, Mildred, I'm talking about our typical final expense client. It's not the case. Our clients are not quite to the sophistication, probably in 10 years, to be Zoom capable. Everything that we're selling in our agency, and this is what I hear from others, is all over the phone when it comes to final expense. So you don't have to worry about Zoom, getting people onto a Zoom call, having them feel awkward because they're looking or watching you on camera. There's absolutely none of that. It is literally you pick up the phone or your dialer and wait till somebody says hello as you dial the leads, and then you're in a presentation to pitch them. Again, very simple to execute on this strategy. That's the overarching point I'm making here with final expense, guys, is that if you're new to this business or thinking about it, it shouldn't take you that long to get up and running. And as you've seen so far, it's not that complicated to understand, which should be promising to you because it doesn't take an arm and a leg and a bunch of time and effort to just make the first sale. You can do that as quickly as you'd like with final expense. Now let's shift gears. Let's talk about the long-term opportunity. So this is where I really think, for me, and why I have committed my business to the final expense business for the foreseeable future. Strategically, this is where my head is, and I think you should consider the same, because what have we seen over the past 10 to 20 years when it comes to the state of the economy, the state of business? Everything's in flux. Everything's in this constant level of change. And when you're looking at a business to be in, even if it's just selling something, you need to make sure that there's some longevity in the business and you're not on the tail end of a trend that's starting to spiral down. Think about the downside of a housing crisis, right? Why would you want to necessarily start selling houses then? It's going to be much more difficult than maybe when it troughs out or starts to go back up. Now, a final expense, the biggest foundational factor that we have that is really feeding the opportunity in this business is the baby boomer population retiring. Over the next 10 to 20 years, closer to 20, I believe, 10 to 11,000 people retire, and not put in here, but needs to be put in here, and are turning age 65. That's really the accurate thing to say. There's 10 to 11,000 people turning 65 daily for approximately the next 20 years. It's 2024 when I'm filming this, so into the 2040s. Now, why does that matter? Because the baby boomers, which there's a baby boom after post-World War II, are hitting retirement. And people these days aren't having as many kids. And so what's happening is that there is a shift in the population percentage that are getting to the age where they start to consider a final expense product. Like, I'm 39, almost 40. I'm not thinking about final expense. But somebody who's 65, 60 even, 70 plus, they're thinking about dying. They've had loved ones die. They've seen how expensive it is to get buried. And they're going to be top of mind about this product because of that age. And the point is, with so many people hitting age 65 daily for years and decades to come, doesn't that seem like a good thing that will benefit us as having more and more prospects to sell to? I hope you see that and believe that like I do. And again, a growing population, percentage of the population, I believe it's somewhere between, like right now, people 65 and older are 11% of the population. By 2040, 2050, they're going to be 17%. Again, there's just going to be more old people, which means there's going to be more final expense prospects to sell to, which is a great thing. Also, this is really important, and this has become more of a real issue now because of what I've witnessed over the past couple of years, as well as really even going all the way back to the beginning in 2011. And the thing is, final expense doesn't have any history. And again, that's history. What's future? I don't know. But I think this is promising. There's no history of government intervention in the final expense space. So why should you care about that? Well, let's take a look at some other popular products out there. The first one I'll talk about is health insurance. So I remember when I first started in 2011, Obamacare, the Affordable Health Care Act, in other words, has really just started to roll out. And what happened was, which you may not know, is that the agents, you could sell individual health insurance plans, and you made a residual income for life on those plans as long as you kept the clients. But what happened as the cost became expensive to implement this plan, because it's guaranteed health insurance, right? There's no more underwriting. The commissions the agents earned on business they sold years prior to the implementation of this new law gradually started to go down and down till it went to zero. And agents who built, and this is the point, agents who built their entire business model on health insurance, who had some six-figure annual renewals, lost it all in a matter of years because of something out of their control and because the government decided that health insurance was a government concern. Now, I'm not pontificating or moralizing any of this. I'm merely sharing with you the facts. You can support this, health insurance, government intervention or not. I don't care about that. The point is, let's think about this strictly from a business perspective. And then fast forward now, we're seeing the same things happen now with Medicare. There's a high likelihood at the filming of this, it's still up in the air, that many of the FMOs overrides, that's the money they make off of the big agencies that recruit agents in the Medicare space, are going to lose a big percentage, if not all, of their override capabilities. And so after building these massive agencies for many, many, many years, they're going to be in a position of where without any control whatsoever, they're being forced out of the business because the governing body says that they shouldn't be paid anymore and arbitrarily decides that. And so again, the point is, maybe that's good for the health of Medicare, maybe it's not, but the point is, do you want to be involved in the business model where you can carefully build something for many years and have the rug pulled out from under you? Because, let's face it, the product is a government good, or it's a good that the government deeply cares about because, it depends. It's helpful to get the politicians reelected, helping Medicare, helping health insurance. So for me, this has been big. and I don't mean to go on too much about this, but hopefully we arrive at the point I'm trying to get at, which is final expense. Let's keep this presentation secret. Let's not give these guys any ideas. So far has not been a good or a product or a service the government has felt a need to intervene in and screw up, to be frank with you. And I don't see any signs of that actually changing at all, which again, the less the government stays out of monkeying with the business, I think the better and more secure the business model will be. Also, the nature of our clients is really important. You see, I mentioned this earlier. Somewhere between, I would say, 90% of our clients that buy final expense are on a fixed income, deriving Social Security income or a disability income. And so what happens is these people are receiving money from Uncle Sam because they have paid into the system and have either arrived at retirement through disability or because they've reached the retirement age and now are collecting on the money they have paid into the system. Again, not moralizing about is Social Security broke, where's the lockbox at, or any of that stuff. Should the age be changed? Don't care. But the point is that our clients are all receiving a guaranteed income and will conceivably receive that income for the foreseeable future. The reality is that, and this is why we've got the train on here, Social Security, and I think disability too, there's a lot of people on disability, is the third rail of politics. Nobody wants to touch the thing because it's going to shock them, and politicians are going to lose their place in the government. And if a politician seriously goes after Social Security, or I believe even disability, the likelihood that people will jump sides to vote the guy out is pretty high. It's a bipartisan issue for the people, at least. So my point here in saying is that, yes, our clients don't have a large income, but they have a guaranteed income. That it would, I would think, take literally a country-size upheaval like a civil war to dislodge. And so the moral of the story, and the point I'm trying to make, is that the fact that our clients receive a guaranteed income that's never been disrupted before, by the way, since Social Security's inception, means there's a higher chance that our clients will have the money to pay for it. Now, will they pay for it? Do they have the money to pay for it? Those are different things. But the fact that they get money guaranteed is a nice thing compared to what happens when the next recession happens and you sold somebody a term insurance plan that's 45 and works at a plant or just got laid off and now they got to start cutting budget back on some things. Those are where those products are more risky because there's more of a direct tie to the health of the economy, where what we've seen with final expense throughout the 2010s, even past COVID, the growth of final expense has not slowed down. My income went up by about 2.5 times from 2020 to 2023 because I believe the higher amount of people are retiring and there's just simply more prospects. Obviously, the growth of the agency too as well. But we weren't affected by the downswing that happened with COVID, nor were we really affected by it back when the Great Recession happened in the early 2010s. So all of these are good things, I think, for the long-term opportunity of final expense. Also, the nice thing, too, with final expense is most seniors have experienced death with friends and family. They understand the need for life insurance. You don't have to say, hey, have you ever thought about dying, Mildred? You know, you're like 80. Has the idea even crossed your mind? Rest assured, your clients have thought about death because they've experienced death with their spouses, their friends, their families, coworkers, colleagues, etc. dying. It's made them quite aware that life is fragile. And at some point, they're going to pass away as well. Why do we care? Because our clients are thinking about dying. They're aware of dying. They're aware of the cost of dying and the need to be prepared. It's an easy thing to get into a conversation with somebody who's in their 60s, 70s, or 80s versus maybe somebody who's 20s and they're living life. They're living their best life. Like, they're not worried about dying, right? Not necessarily. So it's an easier conversation to get into, I believe, with an older individual. So in summary, final expense offers both short and long-term opportunity for decades to come. Hopefully I've sold you on this. This is why I'm in final expense. We used to be more in the Medicare and ACA space, although we've always been number one final expense. But I have dislodged Medicare and ACA as a part of the agency and have focused all of our growth internally on final expense. Incidentally, we had a year-over-year increase in production of about, I think it was like 325%. From 2023 April to 2024 April because of our intense focus on final expense. And I don't see how any of the opportunity with the aging population, the growing aging population, is going to subsist or is going to subside. So again, this is why we're super excited about what final expense has to bring. So now let me step aside here. I'm going to jump off the screen here, and for the live people here or those watching the recording, I'm going to answer some questions that you have. Awesome. Let's pop in here. Okay. So let's see here. Final expenses, best carriers. Hey, Nelly, to get approved. We can talk about that a little bit later. Turnkey, if you have the dedication. Yes. But Laura, I would say this. I know you're not necessarily arguing with me, but I will say this is true for anything in life, right? I mean, like, you got to have dedication is not optional. If you want to be exceptional with anything in your life, certainly final expense is no different, even though it is, in a sense, the best organizations definitely are turnkey. Leads we'll talk about later. Lance, stick with us. We definitely need to know our targeted demographic if we want to be successful, 100%. Again, if you got questions, throw them out here. I'll get to about 20, 30 seconds from now, if there's none, and then pop back in. Auto pay on SS payment day for the win, 100%. Beat the client to the ATM. We'll talk about that. Those are some definite things you can do to maximize the quality of your business, is taking the draft on the day the check hits the bank account. Is there a way to start with free leads to change over to paid leads? Yes. Check my website out, davidduford.com, to kind of talk about the differences between those. Thank you, Will. Appreciate it. Kashan, hey, if I'm generating my own leads, decent cost of beneficiary, is it just dialing the lot? Yes, it's dialing, Kashan. I mean, I'm simplifying this a lot. What we've seen, especially with our free leads program, we monitor the numbers very closely there. It's dialing, and dialing those leads quickly. You make more sales with the fresh leads than anything else, so you want to get to those leads as quickly as possible, in combination with texting them. Text works really well getting people on the phone, so you really want to be doing both. How does this work with each particular funeral director or home? I don't understand what your question is. Well, let me rephrase that. I think I know what you mean. So when a client dies, the beneficiary usually contacts the agent or the insurance carrier and then files a death claim. Death claim, depending on when the death occurs, if it's been longer than 2 years, the policy's out of contestability, usually a couple of weeks, sometimes a couple of days, depending on how fast the carrier is. If it's in contestability, meaning if they're approved level coverage, they're going to check medical records to make sure there was no foul play on behalf of the agent or the client, make sure that it was a legit policy that was taken out. Adverse selection, we can get into more of this if you'd like to, if this is new to you. But the point is that once the family member or the insured dies, you file a death claim. Sometimes a funeral home will help you out with that, and maybe they'll ask for a percentage of the money that would be paid to you to be paid directly to the funeral home. The funeral home gets involved to various extents, just based on how they want to get paid. But yeah, they're involved, but it depends on the level. Tarquin, hey, is virtual option Zoom being considered down the road by Dig? Would virtual be offer benefit of face-to-face to help the presentation? I don't know. I mean, so Tarquin, I don't really know any. Again, there's probably people who sell final expense on Zoom, but I don't know if they sell to a final expense lead. Does that make sense? Like, you can sell to a lead, a final expense plan that's a little bit more sophisticated, but that's not who we sell to if you're in the final expense market. Does that make sense? So I'm game for Zoom. There's nothing wrong with Zoom, but the reality is that right now what we've seen is that it is an extra step that is unnecessary. Look, the thing here is that people have sold over the phone for decades, right? Over the phone sales works, and you can build rapport without seeing somebody if you are taught how to do it, like what we do. So don't think that it can't be done or that it's less effective necessarily. You just have to be trained the right way. I work with Bobby V, and I've had trouble getting people on the phone unless my expectation needs to be reset. Yeah, in short, to answer your question, get a lot of leads, dial a lot of them. Kixie.com, by the way, really good dialer. And then text them is what I would suggest. Okay? All right, let's keep moving on here. Excuse me. Okay. So now let's shift gears and talk about the money. Show me the money, Dave. How does the money work when selling final expense? Now, this will be applicable if you're selling final expense over the phone or in person. The point of this is to give you some guidance. If you're considering this business, already doing it, like how does commissions actually work? How do they pay? What factors do you need to be concerned with? So let's jump right in. So first of all, it's really simple to understand things. You can make things complicated, but you should try to make them simple. So that's what I'm going to attempt to do here. So what you earn is pretty simple. It's the revenue minus expenses equals profit, right? Profit, in other words, is the money that's left over in your bank after paying for all those expenses to run your business, okay? To run your business as an agent. Make sense? And we're going to kind of go through each of these, revenue, expenses, and profit, so that we can better explain how they work in context with selling final expense. So revenue. The definition of revenue is very simple. It is the commissions that you make. Your commissions that you make, especially if there's expenses, and there will be for everybody to a large or minimal extent, is not necessarily your profit, okay? So just because I sell something for $100 doesn't take into account the cost to have sold it, right? It's kind of getting ahead of ourselves. But it's important to understand your revenue is what commissions you make. So how do you determine what commissions you make from the sales that you sell? So real simple, it is the annual premium times the commission percentage equals your revenue. So real quick, annual premium, the best way to think about it is take your monthly premium and multiply it by 12. Most of us in final expense will sell a monthly premium. You won't collect the whole year up front. So if, let's say it's $100 a month, and I'm going to multiply it by 12, that gives us the annual premium of $1,200 annual premium. Makes sense? So then we take $1,200 annual premium times your commission percentage to get the revenue. So the example I used here is 900 AP times a 50% commission means your revenue is $450 before expenses. Okay? So there's some things here that kind of pop up here as we look at this. So what's a good commission rate? 50%, is that good? Is that bad? And that's a really good question. It depends on a couple of factors here. And it really, I think, the biggest determinant is it depends on if you're buying leads or having them provided for free. For example, is a 50% contract good if you're buying leads? Probably not. In the final expense space, at least, because the average size of the final expense plan minus the acquisition cost, that means how much money you have to spend to get a client, would be so low that it wouldn't even be worth doing this business. So incidentally, you need to have a higher commission level if you're buying leads than if you're getting them for free, right? I mean, that just makes sense. If you're hoisting the cost to generate the leads, you better have a position where you're making more money because you're carrying the risk, right? So it's just going to really depend on that. I'll give you our agency example. In our brokers are people who buy leads and then sell final expense to them. They're going to get a higher commission. Their commission starts with our major carriers at 100%. It can go all the way to 130% based off of performance. Whereas our free lead agents start at a commission much less, usually half or less, depending on the carrier at the time of this video. Now, why do they get paid less? Well, because we're hoisting the cost of the leads here at the Dig Agency. So we just have to pay the guy less in order for us to justify doing all the work in the background. It's a lot of work to run a lead program and provide high quality leads to the agent. So that's the thing. Where you're going to see the mismatch here is where we start looking in between the lines. So for example, what if you're on a 50-point contract and you have to cold call? Nah, I don't like that. Or you're working some kind of like phone book lead. I don't like that, right? What if you're on a 60 or 70% contract and you're having to buy leads? I don't like that either. Your margins are super thin, and you're probably not going to really survive long term because there are going to be chargebacks, people canceling, you're going to owe some money back. It's probably not going to be worth your time. So generally speaking, so what's good advice, Dave? What would you say? Well, if you're buying leads, that's the big thing. If you're buying leads, I would say 80 to 90% bare minimum is where you should expect to see commissions if you're buying leads. Any less than that, I'm worried. With free leads, I mean, man, it can range 30%, 40%, 50%, depending on what you get and the offer that you get for the free lead program, I think all of that is very fair because you don't have risk of buying leads. So long story short, you just have to like read between the lines and see if the offer is fair in what you're getting exchanged for. We'll go into more here in a little bit, especially as we go into strategic considerations later on in the presentation to help you flesh that part out. It's really important. Other revenue factors to be aware of: the advance rate. So let's go back. Let me see if I can. Yeah, okay. Let me go back here to this example. You're not going to get, you see where it says 450, guys? You're not going to get 450 up front, okay? That is the revenue for the entire year. But this is advanced. Now, advance is a term, another term for a loan. You are getting loaned a percentage of the future revenue as your commission payment. So what does that mean? Well, all loans have collateral, right? Well, the collateral on this advance is the policy. So as long as that policy pays, then that commission you make is yours. If it quits, if the policy lapses, you may owe a percentage of that advance commission back because the collateral's gone. Okay, we'll get into more of this later. But the point is, you're not going to get all of that either way up front. Most final expense carriers are going to pay a 75% advance rate. So in this example, back again, at 450, if we divide that by 9/12, so 3/4, I want to say 125, something like that. $112.50, I think is what it is. So multiply that by 337.5, I think. That would be your upfront money if you had an advance of 75%. Does that make sense? If it was a 50% advance, you're only getting $225 in that scenario. So understand that's important because there's revenue you can expect for the full year. And then there's what I would call cash flow revenue, which is what money do I get up front in the form of a sale so that I can factor in, especially if you're buying leads, what to expect. Pay on issue or pay on first payment. So what this means is that after the policy is approved, typically it takes a couple of days to issue, where the policy is printed and the product may or may not be in force, but the policy is printed. Typically, pay on issue means you get paid a couple of days after the policy is approved, but before the first payment comes in. Pay on first payment means the policy is approved, then it is issued, but you don't get paid until the payment occurs. Now, why should you care about this? Well, what is today? I think it's the 23rd, right? This when we're filming this. Well, if I sell Mildred today and her payment is on the 15th of the month next month, and I'm paid on first payment, well, I'm not getting paid till after the payment has been successfully collected in June 15th. Whereas if I sold Mildred on a plan today on issue, I'm probably getting paid by sometimes tomorrow or early next week. So the way to think about this is there's fast pay, that's pay on issue, and then there's slow pay, which is pay on first payment. So these are things, again, at the speed at which you get paid, you need to be considering. Okay? Now let's go talk about expenses. So what are your expenses? Expenses are anything that you need to pay for to be in business, right? And the big ones are, I believe, lead costs. So if you're buying leads at a higher contract, that's going to be probably 90 to 95% of your cost. How much do leads cost in final expense? Well, I'm giving you my example as my agency because that's the only example I give you. Usually our agents are spending somewhere in the neighborhood of $750 to $1,000 a week on their leads. So that's the biggest driver of their cost. There's also, again, if you're getting leads for free, there's no cost when it comes to lead cost. But moving on here, there are other costs you have to be aware of. Like, for example, if you're doing telesales, you got to have a CRM. You got to have some kind of CRM that will organize your data, your leads. You can keep notes on. You can keep track of things. We provide that, again, in our free lead program. We provide that for free. If you're a broker, it's $100 a month plus variable cost. There's also a dialer cost that you need to have as well to dial the leads and get them to pick up. We love Kixie. Just a recommendation. Everybody watching this, highly recommend Kixie. That cost is free. There's no cost for the agent if they're on our free lead program. It's about $150, $200 a month if you're buying it, but well worth it. So there's software expenses to be worried about. Also an underwriter quoter. We like insurancetoolkits.com or bestplanpro.com. Both will price your client and underwrite them. So you put all their underwriting factors in, and then it'll spit out suggested carriers that will give the best price and the best value of coverage. It's a must-have. It's like $35 a month, roughly, for either of them. Cancel anytime. Excuse me. You also have licensing, errors, and omissions. The licensing process to get started, I just usually estimate $200 to $400 to just get your license in your state when you consider pre-licensing. Errors and omissions is probably going to be about 150 down, 40 a month is what I said earlier. And then if you're doing telesales, you likely have to pick up additional states. And these would be if you're buying your own leads or in a free lead program. For example, at the Dig Agency, we make our agents joining the free lead program buy an additional 9 states or 10 states, depending on where their home state is, for a total cost of around $800 to $900. So there are carrying costs to add in additional states. You are required to have those states to sell insurance into. So some side notes here. Yeah. So we're talking a lot about the costs. You know, the $750 to $1,000 a week may have shocked you. That's a lot of money to spend. So is it really better to buy leads on your own at a higher commission, or is it better to have a free lead program? My opinion here, and this is based off of recruiting since 2013, is that probably for 90%, and I really mean that, 90% of you watching, it's better for you to do a free lead program, and the success rates will be higher if you do a free lead program than if you buy your own. These are observations I've made since having the free lead program and why I've come to this personally. So first of all, what I've noticed with agents is that the agents who don't buy leads and they get them for free, yes, at a lower commission level, tend to be more stable, less emotional, and more consistent with their production. Whereas the agents who buy leads, and this isn't across the board, but a lot of them, they're more unstable, they're more frustrated, and they make poorer decisions. Why? I think it's because of the money that they're investing on a consistent basis. If you've never done this, here's what happens with a lot of people. And this is totally normal. You spend $1,000 a week. You have some good weeks, but then you have a bad week. Then you have another bad week in a row. You're down $2,000. You're flipping out. Your spouse is yelling at you. You're wondering if the leads are bogus. You start to reconsider the leads themselves, and you start looking at other lead sources, maybe to spend less money because you're scared because you spent all this money on leads. And you start making worse and worse decisions about your business when you should have just stuck to it. And again, even though I've trained agents on how to think, there's just an emotional component when it comes to your money being at risk. And this is why I think the free lead program is really freeing in a sense, no pun intended, because you start at zero every week. And I can't stress enough, it sounds simple, but I can't stress enough how powerful that is for the vast majority of you watching. When all you have to worry about is just picking up the phone and dialing and closing and not worrying about spending the money to buy leads, it is freeing and allows you to focus on what makes you money, which is selling insurance, and not getting into the head game of should I spend the money this week or not, or should I change things up or not. So incidentally, our free lead agents, and I've seen this with other agency owners as well, perform better, are more consistent, and arguably make more money. So with that said, you may be an entrepreneur, somebody who's run businesses, you've had payrolls before, etc. You may be better off as a agent buying his or her own leads. I'm an entrepreneur. I probably would never do a free lead program. I'm more of the type that likes to take the risk on because that's just my nature. My father owned a business and sold it. My Uncle Dave helped start XM Radio. Grandpa ran a HVAC company in Detroit. It's in the blood, right? But it may not be for you, and that's okay. And that's why we intentionally tell agents who are looking at joining the Dig Agency is seriously consider the free lead program. Probably should go with it, considering the success and what I've researched elsewhere in other programs. Okay, now let's talk about the fun stuff, the profit, the money, the actual money that's yours after you take care of expenses. So definition is, again, revenue minus expenses. That's your profit that's left over. It's what's left over in your bank account. The things to keep in mind about profitability are this. What's a good profit? So personally, for me, I think if you're on a free lead program, roughly you should be making $250 to $300 profit per case for outbound sales. So that means when you're calling the leads up to sell them, you're not waiting for them to call you. And it can vary. Somebody in our group the other day wrote a $4,000 case, right? Like he's making more than $250 on that one, right? So it just depends. But $250 to $300 is probably the average case size and profit that a free lead agent is going to make. Now, for buying your own, it should be a little bit better. I would say, and this, again, varies, should be around $400, $500, $600 per case. Now, why is the profit better buying your own leads? Because you're carrying the risk. It should be better because it's your money at risk. You should have a higher reward. And what about renewals? So renewals, going back here, renewals are not something really to be concerned with in final expense. Let me talk about this a little bit. So renewals are the money that you earn each year after the first year. We would think of it maybe like as a form of passive income. Well, the truth of final expense is that if there are renewals paid, they are so low that they really won't make that much of a difference on personal production. The average renewal a person who's buying leads earns is probably $3 or $4 a month, okay, per policy. Think about it. You have to have 1,000 policies in force to be making $3 or $4 grand. It's just not that good. If you want to build a renewal-based business, that's where building an agency comes in handy, because then you make the spread on many people and the renewals are much better and more significant. But in short, let me be clear. If you're getting in the final expense business to build a renewal base, don't. This is not a renewal-driven product. Sell Medicare, ACA, or property and casualty, car insurance. Those are renewal-based products. They come with a whole host of different problems. They're much more service-intensive, but you get paid renewals, okay? So let's go ahead and put it all together, because we've talked about profit, talked about expenses and revenue, and let's answer the question, how much money can you make by selling final expense over the phone? Whoop, I guess I just already did that. Okay, now let's go ahead and answer your questions. Let me see if there's any questions about really the money side of this business. I think this would be a great opportunity to maybe clarify anything when it comes to commissions and cover anything that is of concern when it comes to the profit, expenses, revenue, commissions, etc. So go ahead and throw your questions in the chat. Once I get to the bottom of this, we'll go back on the broadcast. Okay. All right. Older people have to figure out how to actually use Zoom. Yeah, that'll happen with probably in 10 to 20 years, right? When I'm an old person, right? So what about the advance if the insured passes away? In most cases, those will be paid back if it happens in the first year. You only get advance on the first 9 months or 6 months. Typically, you have to pay that back. That's usual, but it's rare. It's very rare that they die in the first year, although it does happen. I think the free leads program is best for beginners, but once you have developed your skill set, then I would say try the buy your own leads program. So Dom, you would think that, but that's not been the case I've seen. Many agents who free leads is not a step, and this is a common question. Free leads is not a stepping stone to buying leads. It's something you arrive at, it's not like a stop point to get to the next point. Agents who start with free leads should stay there. It's just more productive and more beneficial and more money making. The agents I've seen, not all the time, but a lot of the time, that transition to a broker situation, their production falls off a cliff. They're not as consistent as they were before. And yeah, they have a higher commission level, but they don't make as much money. And I've seen this happen in my agency. I've seen this happen with other colleagues that run their own agencies that have free lead and broker programs. It's counterintuitive, but it's better if you just, when something works, don't break it. It's kind of what I would say. And it holds up. Let's see what else here. What happens to the people that I have insured if I decide to leave the agency? I mean, they stay insured. We are not LOA, Duncan. Can you explain the commission profit one more time? Go back and rewatch it. It's recorded. Hey, man. El Jefe. That's not me. Someone steal my name. Just kidding. If I'm not buying leads and I'm on the free lead program, why should I do an advanced commission as opposed to pay as earned? I mean, you can. You're just going to be getting paid like, let me see, $30 a month, $40 a month. Like, it's going to take a long time to make a lot of money. So I mean, I'm not opposed to that, but I've heard this question asked for years, even with people buying leads, and nobody ever does it because you got bills to pay, unless you live with your mom or something, you know. On the free lead program, yeah, chargebacks are split. Your chargebacks are portioned out to their commission level. So you're always only responsible on a chargeback basis for the percentage commission you earn. Commissions are equal as your time and effort put in the job. I don't understand. There's no guarantees on making money, Nelly. I mean, some people try and they fail out at our agency because they're just not a good fit, or we're not a good fit for them. So there's definitely no equity. There's no what's the word I'm looking for? Guarantee. However, what we see, there's a correlation. Correlation's not causation, but there's a correlation between the agents that put in 50, 60 hours a week, get a lot of leads, and put a lot of time in on the phone. They correlate with people who make more money. Hey, Veronica, I'm buying my own leads. Cost per lead and conversion determine return on investment. It will make or break your business. It's not for the weak. My CPL shot through the roof last month, and I'm feeling it. Yeah. That actually happened for a lot of people, Veronica. I know we felt the burn. Our CPLs, and that's the cost per lead, guys, something you should manage if you're buying leads. Our CPLs probably went up 30 or 40%. I had other owners of agencies in our agency griping about the same thing. I don't know why Facebook does what it does, but they've collapsed since then. I think our average CPL is down about 50% from its peak a month and a half ago, which is just crazy in a short period of time. On free leads, our renewal commission split, yes, they're extremely small. Again, very little, if any, renewals with the free lead program. All right. Okay. Keep the questions coming. In the meantime, we're going to switch gears back to talking about the next topic here. All right. So now let's talk about the day in the life of a final expense telesales agent. The purpose of this part of the presentation is to really give you some insight as to what to expect selling final expense, what you'll do in the beginning of the day, middle of the day, end of the day, so at least you get an idea and a feel for what the day-to-day action is like, okay? So first of all, my recommendation is to start your day at 7 a.m. or 8 a.m., okay? Depends on where you live. I mean, conceivably, if you live in California, you could start at 5 in the morning because the East Coast is up in an hour from where you're at, and you could start dialing for there. But the point is, you want to start your day early, and I recommend, by the way, make sure you schedule some time in earlier than this for exercise, some physical health. When you're selling over the phone, you're sitting on your behind all day. Now, you may get up and walk around a little bit, but you're not active in this job, okay? We joke about the final expense, the freshman 15, the joke, you go to college, you gain weight. We have the final expense 15. That's a real thing. So make sure you do some kind of physical activity before this. But when you start your day, my recommendation is always to review your cases on your carrier website. So you start your day even before you start making phone calls. Check your lapse reports. Have people missed their payments? Sometimes you'll just get email notifications. Do a report on where things stand so that you can reach out to these people either that morning or later that day in order to ask them what's going on to see if you can keep the policy on the books and catch their payments up. So again, check on approval and missed payment status. Most of your policies are going to get approved on the first call, so it's less about approval and more about just policy retention. Schedule follow-ups with any clients that you need to help. You can text them, let them know, hey, you missed your payment. I'm going to call you later, and then we'll talk about it, that kind of thing. Again, I want to stress here, you may do 30 minutes of this a day on average. Some days are worse than others. But there's very little service work in the final expense business. What you're going to be doing is predominantly what we'll get to in a moment, which is selling. And that's why you're here, hopefully, is because you want to sell insurance successfully. You don't want to get bogged down in service work. So from 9 a.m., roughly, to 5 to 9 p.m., all you're going to do is call your leads and run any preset appointments that you got, okay? Your goal, as you dial through these leads, is to close the sale on the first call. You more than anything, you need to have the mindset that the goal is to close on the first call. What you don't want to come into the final expense business doing is calling and accepting that a client saying, call me back tomorrow is the norm. Do exceptions happen? Sure, but they're exceptions, not rules. The rules are to make good money and be successful selling final expense over the phone, you must sell on the first call, okay? So let that be your goal, your mindset, and let that be unshakable, even though we know there's going to be exceptions. Notice also I said 5 p.m. to 9 p.m. This business requires several days a week to call late, to talk to people on the phone who maybe have been out all day and now are at home in the evening hours. If you don't call much beyond 5 p.m. at any point, you're missing sales. You're not maximizing the leads. You're not going to make as much money as you'd like. So make it a point for at least 2, if not 3 of the working days a week to call up to 9 o'clock at night in order to maximize your income from the sales of your policies. Understand too, in final expense, you've heard this if you're watching this live. It takes from commentators in the audience. A lot of people don't answer the phone. I commonly say the biggest problem in this business isn't the no's, it's the maybes. The people that maybe will pick up after you've tried calling them several dozen times, and no joke. So it's going to take a lot of calls to get people to actually pick up the phone. Now, there are some things to do that, and I'll cover that real quick before we go to the next bullet point. I recommend a couple of strategies. Number one, triple dialing, to call the number up to 3 times in a row over a short period of time if they don't answer the first 2 times. That's a pattern break. It gets people to pick up the phone that otherwise would, and allows you to connect with more of your leads. Also, I like the dialer service called Kixie, Kixie.com, Kixie. We use it in our free lead program. We highly recommend our brokers use it. The product, in short, is designed to connect to more of your calls. There's spam likely and telemarketer likely filters now that filter out a lot of phone numbers. Kixie constantly scrubs those numbers, replaces them, rotates them out so that people won't think that you're a scammer or telemarketer calling them, and thus more likely will pick up. They also own many, many numbers in each area code and will show those numbers when they dial, even though yours may be different, in order to, again, encourage them, oh, it's a local call and it's not a scam. Maybe I'll pick this up, right? So Kixie's really good about getting more people to pick up the phone. But understand, even with that, it's going to take a lot of dial time to get people to pick up. When you reach a prospect, present according to the script. Now, this is very important. We're going to get in the script a little bit later, but it's imperative that you don't wing it or that you follow some of the script. When you're selling over the phone, you should have your script up in front of you on a monitor, reading it as you are presenting until you have memorized the thing, okay? You probably should have it up anyway. Don't deviate from the script. Don't, like I said, kind of just go with the flow, ad-lib it. There is a script for a reason because it makes people money. And your best advice to you, my best advice to you, is just follow the damn thing. Don't think that you're better than the script. Continuing, good agents sell. How many of the leads end up selling? So out of every 4 full presentations, that's what we mean by prospects I talk to, expect to sell 1. That's a good number. Some agents will sell 1 out of 3. Some of the best ones, 1 out of 2. But you're not going to get all of the presentations you make to close. You should think as if you will, but understand 3 out of 4 are going to tell you no. We're looking for that 1 out of 4 that is just perfectly primed and ready to buy, all right? And it's going to take a lot of work presenting and pitching and dialing to get to that person who's going to buy. Good agents who call long enough will sell 1 to 2 policies minimum each day. Again, that's why this business is very much time on task. If you put the work in, you've got the diligence to make it happen. You're just going to call a lot of numbers, and people invariably pick up, and therefore you have more pitches and presentations. I would recommend through the day, take breaks every few hours to regroup, to get back on the phone. This is a performance-based activity. It's like you're a professional athlete, but you're a salesperson, right? But all the same things that affect an athlete affect you, your mental state, your emotional state, your ability to focus. So it's important to not just work and grind it out constantly all day, but to also take some rest periods. However, when you're hot and you're making sales left and right, I wouldn't say rest at all. I would say, triple down and take advantage of the position you're in. Long story short, more time on the phone equals more likely that you're going to make sales. It's just that simple. This is the problem. This is why we don't take part-timers for telesales anymore, because part-timers' restriction of time prevents them from the need to have a lot of time on the phone to make deals happen. And what a lot of people don't understand is that you may call one day and not everybody will pick, nobody buys from you, but then the next day, 5 people buy from you. It's that time on task in totality over a full-time period of time that allows you to realize what is possible and profitable out of this business, whereas part-timers just don't perform. They don't have the time, the consistency, and the required dedication, unfortunately, to make it work, which is why we don't hire part-timers anymore. End of the day, my recommendation, and this is the nice thing about being in final expense and working remotely at home, like I leave my office, I'm with my wife, my 4 kids, I can have dinner, I'm with family. You have such a blessing that the face-to-face agent doesn't have. He has to drive home sometimes up to 2 hours away. That's what I would do every night for years and years when I was selling in person. You are right there with your family at the end of the day, even when you work a late night. Don't discount your blessings. And so you're there. It's a nice thing. So there we go. Let's take some questions from the audience. And I'm going to take a slight break for myself, speaking of breaks, to refresh my voice and grab some water. All right. What's the average closing rate on free leads, Veronica? It varies week to week. We closed 7.15% of our leads last week. I don't know where we're at right now, but 7's really good. Typically, it's between 5 and 6%. What would be the monthly expenses and free leads? For us, Jose, $900 for your license. That's a one-time fee, payable every 2 years, I think. Errors and emissions, $150 down, $40 a month. Insurance toolkits, $35 a month. That's it. We pay for everything else. Yeah, Laura, it's awesome. We love Kixie. Yeah, the Kixie.com is what we use. Let's see here. How many leads do you need per week? Yeah, I mean, I think it's better to start with less as a new agent and then build yourself up, because we see this in our free lead program. Some agents will start with we'll work them up to a ton of leads really quickly, and then they just can't perform. They're in a position where it's just overwhelming. So I think ultimately 150 to 200 is where you want to be, but gradually getting there is the goal. What is the connect rate per 100 leads, people that actually pick up the phone? And what is the no-show rate or when booking appointments? I don't know off the top of my head for the connect rate. That's going to vary per person if they're using Kixie or not. I know the close rates, though. That's representative of results. And what is the no-show or show rate when booking appointments? That's low. It's typically under 50%, well under 50%. Probably 30 to 40% is probably on the high side even. If you're doing Facebook preset appointments, there's a lot of no-shows, but the people that show up are usually really good. I think Jay closes a half to 2/3 of those. That's our agent who's done $100,000 a month, multiple months. So really good. Is there a set number of free leads available per day? It depends on your performance. We scale you up slowly, right? Just depends on those things. Okay. How are we doing on time here? All right, slide 34, and we're an hour and a half in. All right, if you guys got more questions, throw them in the chat. I'm going to go grab some water real quick. I'm like parched, so I'll be right back, okay? Give me like a minute. Okay. Yeah, for sure, Barbara. There's quota expectations to begin with. DavidDuford.com if you want to check more about that. Okay, cool. Thanks, Rob. Cool. All right. So far, so good. How are we liking this presentation? Hopefully it's along the lines of what you guys wanted to see. So let us continue. We're going to move back into our presentation, and let's let this load here. So let's talk about 16 reasons why selling final expense is awesome when you do it over the phone. So I've compiled, I think, the 16 high points of what makes final expense so great and beneficial to sell. Again, the purpose of this part of the presentation is to sell you guys out there who are thinking about getting into this business, aren't quite sure, maybe already doing this and you're kind of, not happy with where things are. There's some really good things about this business that are just so fundamentally awesome that I think because of it, it's well worth staying into this or committing to it as a new person. So number one, maybe surprising to you, there's absolutely zero sex appeal when it comes to selling final expense. Now, what do I mean by that? And why would that be good? So reminds me of a neighbor we used to live next to. She asked me, what do you do for a living? And I said, I sell burial insurance. And she shuddered. She goes, ugh. Like she was disgusted by the idea. And why is that a good thing? Well, because people don't get into the business of insurance sales thinking about final expense. They usually stumble across it. A lot of you probably watching this video saw something else, maybe a review of another agency or one of my other pieces of content before you even knew what final expense is, and you've been doing your due diligence, and now you're like, oh, this is kind of cool. So the idea behind burial insurance and the nature of who we're selling doesn't turn on a lot of people. In fact, there are professional life insurance agents that look down on burial insurance. It's beneath them. They sell real insurance. They're all high and mighty and stuff. But that kind of attitude and the fact that this isn't like a well-known product is what I'm trying to communicate here. The fact that nobody wants to grow up selling burial insurance is a good thing. It makes it a less competitive enterprise than, say, property and casualty insurance, where everybody knows about car insurance or everybody knows about health insurance. That attracts a lot of people just by default. But it takes an extra layer or two digging around and doing due diligence to find out about final expense, which I think makes it very appealing. There's not going to be as much competition as there is in these other sectors. And I think because people kind of turn a nose to it, in some sense, means it's a better opportunity for you than other products. Number two, it's a one-call close. Again, I can't stress enough, this business model is not like annuities that takes 2, 3+ calls to close. It's not like these elaborate products that have longer sales cycles. This is a salesman's-based product. The sales always happen only on the first call. At least that's the mentality you have. Of course, there's exceptions. But the fact that these sales happen on the first call means there's a faster sales cycle and then a faster profitability cycle. You're going to make money faster selling final expense than selling other products like annuities or even Medicare, because it is a one-call close driven business model. Number three, it's fast pay. Again, this is part of the reason why I backed out of Medicare sales, because Medicare and ACA too are slow pay. They pay very little the first year, but it substantially grows if you build on that for many, many years. But the reality I've seen and used to recruit agents for many years in those is that most agents need money yesterday. They need a commission to pay a mortgage or to pay for food and living expenses, right? And while those businesses aren't necessarily bad long-term to consider, in the beginning, not good. And this is why final expense is superior in many ways, because when you make a sale, you're going to get paid within days to weeks. You're going to be in a position where you're making a commission fairly quickly relative to fully underwritten products, annuities, which can take months sometimes to move through compliance and get approval and underwriting. Next on the list here, it's a solid first-year commission. Average plan after cost, depending if you're free leads or buying your own, $300 to $600 in commission. Again, being a volume-based one-call close business, there are agents that scale this up to 5, 10, 20+ policies weekly. So you do the math, it can be very profitable if you are a hardworking person. And then compare that to Medicare health insurance, where you may get paid $0 to $300 after cost. And the key thing here is after cost, because even though these plans can pay good money, approximately $300 a year, give or take, for Medicare and health insurance, when you factor in the cost of doing business, like buying leads, it's going to be way less than that. Sometimes it can be negative depending on the time of year you write, let's say, a Medicare plan. Or you're going to get paid a pittance if you're on a free lead program with these kind of plans. Number 5 reason to sell final expense, it's easy to get leads, and it really is easy to get quality leads. There's multiple platforms to yield generation from. So for example, Facebook, that's what we do at the Dig Agency. Facebook is a platform for old people, guys. I mean, like, kids aren't on that. My 14-year-old, he's on Snapchat. He's not on Facebook, no interest whatsoever. Facebook is a platform for the older population, thus a great place to market and generate leads from. TikTok is great too, actually. A lot of the older people are migrating to TikTok because their younger grandchildren aren't on Facebook. So there's a lot over there. Television still works really well if you find a solid TV lead generator. So pick your poison, guys. There's a lot of different opportunities to get leads, and you shouldn't be in a position, unless you just don't have the resources, which is why you hopefully watch my channel and get some advice, that you shouldn't have access to leads. Number 6, simple sales process. Final expense is easy to understand. It's easy for you to understand as a new agent. It shouldn't take you more than a week to 2 weeks to be sales ready. It's easy for the client to understand. And it's like this. Are you going to die? Can you pay for it? If not, then you need my plan, right? So it's not something that it takes a brainiac to understand, both for you as the agent or the client as well. Number 7, the industry trend favors remote sales. Right now, it's interesting in our agency. I would say this number now is closer to 90%. 90% of Dig Agency applicants want remote telesales work only. They don't want to get in the field. They don't want to be in a position anymore to sell in person. And the industry has shifted to form fit that, to tailor for that. So your carriers all accommodate for it. Of course, we at the Dig Agency support that as well. So if remote is where you want to go, it's a perfect opportunity. And all the carriers are remote friendly. And a lot of clients now are comfortable with this. Again, I think COVID did this, but there was a time 5+ years ago where it's like, I don't think these clients are going to buy over the phone to the extent that they should or would. That is not the case now, because I think with COVID, a lot of our clients were forced to get on Zoom. They were forced to deal with doctors on Zoom, talk to their family on Zoom, and do things remotely. And not necessarily Zoom, but maybe over the phone, but to not necessarily have to be in person with the other person they're transacting business with. So I think this shift has helped the telesales agent become more accessible to more people, and with clients more willing to do it. Number 8 is a growing base of prospects. Again, 10 to 11,000 baby boomers are hitting 65 daily for the next 20 years. We're going to see a 50% increase in the population over 65 from 2020 to 2040. And this is very simple math, guys. More prospects equal more sales opportunities. You're not necessarily getting that in other niches, but you absolutely are getting a growing base of opportunity if you're selling final expense. Number 9 on the list, prospects have guaranteed income. All retirees get Social Security payments until they die. Despite financial concerns with Social Security, it's been incredibly robust. Social Security has never missed a payment to its recipients, and doubt it ever will. And then Social Security, like we said earlier on, it's the third rail of politics. I don't care that the government people, they're not going to get into this and change anything substantively. Social Security is here to stay, even if it's broke. These people don't want to lose their jobs and go down trying to save the system financially. It's going to take some pretty bad things to happen, which at that point, who's selling final expense to worry about this in order for Social Security payments and disability payments to go away. Number 10, it's simple to scale. This is another thing I like about final expense. There's a couple of ways you can scale here. First of all, if you want to make more money, work more, buy more leads, or get more free leads. That's it. Do work plus more leads, or get whether they're free or not. And spend more of your time doing this. Like, this is something that took me a couple years to realize. I saw agents at the time writing 400,000 plus a year, which back then was a lot. Not so much anymore. It's still pretty good. But we have agents that are trending 600,000 plus, right? Like top agents. And the only thing that this agent was doing different from me was he was buying more leads and he was running more appointments. So if you want, and that's the way you make more money, guys. To an extent, you got to get your skill set better, but at some point, it's about just doing more of what works. Again, the top 5% do the same thing the top 50% people do, just way more of it. So again, that's the pro tip here. If you just work more, take more leads, that's the way to make more money. Number 11, cross-sell opportunities. Now, I'm not a big fan of cross-selling, especially for new, so don't take this the wrong way, but you can cross-sell other products beyond final expense to your final expense leads. For example, you can sell things like Medicare, annuities, health insurance, and more. Again, I don't recommend that you do this, guys, until you're a year into the business. Even if you if you ever even consider, you may not even need to consider it. I guess that's what I'm trying to say here. Some agents are just fine doing final expense strictly and not confusing matters, because taking on different products, it exponentially makes selling insurance more complicated. Anytime things are more complicated, it's harder to perform. Number 12, agency building opportunities. So again, in final expense, if you're recruiting training agents as your goal, look, everything we've said applies to agency building. If you like and are inspired by this business and one day want to build an agency, plenty of opportunities to do that. Now, I don't recommend you do that as a new agent, of course. I think that's a failed idea to worry about building until you have a bedrock of commission and renewals coming in. Your back-end commissions that come in after the advance pays is what I mean. And it's a risk taking on agents for many reasons, but it's something you want to wait on and get good at first as far as sales go before you worry about training and recruiting. Number 13 on the list, ability to shop for your clients. And this is if you go the route of being an independent agent. We at the Dig Agency support the independent business model where we don't marry one company, but we have access to multitudes of companies so we can shop and find the best combination of price and coverage for our clients. If you're a captive one carrier product, you're not going to be able to shop. And what incidentally happens is that your rate of policies staying on the books and paying is lower, generally speaking. And you won't sell as many of your leads because you won't be able to get them quality coverage that you could if you had multiple carriers. So in bottom line, independent agents have options, and more options equal better coverage at better prices. And better coverage and better prices, generally speaking, means more of the business that you write and close sticks on the books and lapse rates are lower. All of this is important and good to maximizing your profit. Number 14, why I love final expense is there's no pesky history of government intervention. There's no history of any sort of government intervention at all in final expense. And we talked about this earlier, comparing health insurance and Medicare, the Affordable Health Care Act, how that eliminated the health insurance agent, how it's looking like something similar may happen to the Medicare market. And it's all because these products are just intimately entwined with what the government wants. Final expense historically has not been, and that's a good thing. Number 15, final expense doesn't require much intelligence to sell. Sometimes having a big brain gets in the way of being successful. If you overthink this stuff, you may overthink your way out of the business. You don't need to be a genius to do well at selling final expense. And in fact, like I said, if you think too much, sometimes it crumbles your chances of being successful. It's a rinse and repeat business model. Just follow the system until you're dead or you retire, whatever comes first. Number 16, I like this. I picked this up from a Matt Sapola. He's Patrick Bet-David's right-hand man. He mentioned this on a video talking about real estate. There's no inventory in final expense. And I think from a business standpoint, you don't have to invest in, you don't even have to invest necessarily in leads in order to enter this business. You know, we'll do that for you if we think you're a good candidate. You don't have to buy equipment. You don't have to buy, the costs or the goods that are required to build the product. Like when you write an insurance policy, it's created on the spot out of thin air when that policy is approved, and you don't have to pay for that process. You do have to in leads if you go that route, but like I said, you don't really have to do that if you're in a free lead program, right? So all this is good because it's not like other business models where you have to put up a lot of capital up front before you even can make your first dollar in sales, right? So before we get to the next section, that is it there. Let me take some questions here from the audience and see where you guys are going, what questions you guys have about the final expense business till we get into what makes the final expense business bad and not a good fit for some. Let's see here. Are the leads actual people interested in the product? There is no such thing as a lead that is ready to buy. You have to understand the psychology, Jose, of leads. Like people have interest, but they don't necessarily want to commit till they know who they're dealing with, what the product is, and do they feel good about it. And that's why a salesman is needed to bridge that gap between basic interest and then commitment, right? So no, there is no leads that are ready to buy. There's typically people who would buy if they have their conditions met when it comes to the details of the policy. And that's why we sell it. But with that said, our leads are high quality, I think. They know it's about life insurance. There are some leads that they don't know it's about life insurance. It's kind of a hook, a bait switch, right? And generally speaking, our leads are very fresh. People request it pretty quickly, and you talk to them pretty quickly from the time they requested it. If we have upcoming vacations over the holidays, will it be terminated? No, we actually have a button on our CRM that says, I'm taking time off. Don't send me any leads. We're completely cool with that. Are the free leads the exact same as the paid leads? Yes. No, you can't buy preset appointments. Free leads are the same as purchase leads. Thank you, Will. Random kisses and hugs from my family because okay. Final expense is a final gift from their proposed insured to their family. Correct. People really want that if possible. Can agents call leads on Saturdays? Yes. Saturdays, no. Sundays, there's certain restrictions, of course. I was looking up what WFH means. I think that's what that says. You have to inform me. Can agents call leads on Yes. Sundays, some agents do, but I think some states don't allow it. Saturday afternoon, we're always hot for me, 11 to 3 prime time, but maybe that's just my market. Yeah, Saturdays are good. Saturdays are great. Absolutely. Does DIG have written contract with agents? We will eventually have a contract. The contract will stipulate like a no solicitation and of clients and like a no solicitation of agents to like leave and join another agency. We're in the works of having that. Basic stuff to protect our interest in the leads that we purchased and the business that we helped you procure, but also for our agency as well. Just basic stuff. Hold on 1 second. Blow my nose. All right. Average premium for us, Barbara, is $900 in premium. It shifts up and down. We've seen dips recently in the $700 to $800 range, but interestingly enough, our profitability in our free lead program has gone up. So it's somewhere in the range, closer to $900. If I get work from home, okay, great, thank you. If I get free leads, but make a sale from a lead that I develop on my own as a commission, no, it's not. We don't have the ability to change that, Phoenix. It is what it is. And really, Phoenix, you shouldn't be doing that unless it's like a friend or family. You really should be doing our system. Like we have a turnkey system. It's not designed to sell friends and family. It's just a different strategy. Do you believe Kixie is a must with 1 HP? No. Yes. Kixie is a must with 1 HP. Or 1 HP? Go high level. I'm sorry. Yes. It is a must with Go High Level. I would not use Go High Level's phone system, period. About to get on the phone soon. Very good, Mike. Sounds good. Great. Glad you enjoyed it. Good. Cool. All right. Let's keep going. So good. Now the fun part. Let's talk about why you shouldn't do this business. It's been rainbows and sunshine up to this point. Excuse me, guys. Sorry. All right. Let's get this started. All right. So now we're going to talk about why you should maybe not consider selling final expense, depending on your circumstances. This is a request by an agent of mine who was like, look, Dave, you can't talk about the rainbows and sunshine and how great this business is without talking about the raw truth about how some of it's bad. And I considered it and thought, you know what? He's right. The truth is there is good and bad in any business model. And me getting up here and talking about just the good stuff would be kind of not genuine, insincere, as they say. So I want to bring you what I feel are the bad parts of this business, because what I don't want to have happen is have you enter this business under false pretenses and find out it was a waste of your time and money. We're always running out of time, and we could possibly run out of money. So you need to carefully consider if the realities of this business are a good fit for your personality type, because if it's not, then don't do it. There's plenty of other opportunities out there. So let's talk about the failure rate. The report is like 90% or more of new life insurance agents fail out within their first month. Cody Askin says it's 92%. I think it's like 95%. I guess I'm a little bit more negative or nihilistic. But all I need is 90%. That's pretty bad, right? 9 out of 10 agents fail out of their first year, right? So even if that's true or not, can't really confirm or deny it. The truth is it does seem pretty accurate, as there's so much more difficulty in succeeding in this business than most ever imagine. Even watching my content, you're like, man, I feel really informed. I feel educated. I feel good. Trust me, there's a lot more to this business than just what you're watching. And it's going to be way more overwhelming than you think. And that's part of the reason why many people fail out is they don't take this as seriously as they should. But we'll get into more of that in a minute. So let's talk about why failure is so commonplace. So number one, opportunity mismatch. I think this is probably the biggest reason why. So let me explain what I mean. What do you really want to accomplish in your business? Do you want to recruit agents? Do you want to just sell? Do you want to sell in person? Do you want to sell over the phone? Do you want to buy leads? Do you really have the money to buy leads? Do you want to do free leads? Are you psychologically prepared to accept a lower contract to do free leads? And all of this may sound silly, but this is really important. Like, what do you really want out of this business? And the truth is, there's no criticism here, we usually get in this business because somebody else referred it to us or we stumbled across it. The person we listened to sounded good and we trusted them. But little do we know, going on as progress ensues, that there's a lot of things that we don't know about. And we stumble across the fact that, oh, this organization I joined is an MLM. They want me to recruit all the time. I didn't know that. The guy didn't say anything when I recruited him. And now you've wasted this time because you've gotten in bed, figuratively speaking, with a business model that is not aligned with your goals, okay? And what price are you willing to pay? That's the other thing here too. Are you really going to get into this business and give it what it deserves? Let's say you find the perfect agency with great training, great commissions, great support, a system you can get behind. Are you really going to pay the price to be successful? Success is not overnight, guys. Like, it takes time to be successful. We have agents who start off with lower production, but over the course of 3 to 5 months, gradually get it better and better, become really good producers. And then there's the whole process of paying the price of being consistently successful by giving it consistent time. Can you really put in 40 to 50 plus hours a week consistently doing the fundamentals? Can you commit to that? A lot of people fail out, can't, because it requires a lot of effort. And a lot of people don't want to put in the effort. Let's face it. They want to do something easy. Well, folks, nothing's easy in life if you want anything that's exceptional out of it. And are you really ready for entrepreneurship? Or you want something closer to a sales job? Again, this goes back to my point about, do you want to buy leads and manage a lead budget and figure out where to get leads and hope that they work out? Or do you just want to sell? Do you really just want to sell and let somebody else with the skill set, knowledge, generate a system and leads to help you accomplish that? There's nothing wrong with just being focused on selling in a free lead program. But asking these questions is the point, because what we want to do is figure out for yourself and contemplate what's truly important to you, because that is what's critical for your success. The more you can ask yourself these questions and figure this stuff out and do your due diligence, which is why I try to build my YouTube channel around is facilitating due diligence. And you can figure out what you really want, man, the likelihood is higher you're going to be successful, okay? So really, don't do what everybody else does. Jump into the first opportunity that sounds good. Put your brakes on. Do your due diligence. Watch this content. You're already here, so you're halfway there. And really think about what's important to you. What do you want out of this business? And look at slowly opportunities that seem to match it and go through the process to see if they're a good fit. If you don't, you're probably going to fail. Number two, so many are baffled by the bullshit of multi-level marketing companies. Okay? The likelihood is that 90% of you, I use that number, but it's so high, 90% of you got into this business or became interested in it because there is a multi-level marketing company, unbeknownst to you, that you were attracted by that drew you into this business. And you have to understand, multi-level marketing overruns the life insurance business. It's every major carrier, every major organization out there in some form or function is an MLM. Now, not all of the sub-agencies associated with it may be oriented towards MLM, but a lot of them are. And the point is that you have to be very careful that you're not being tripped up by the allure and the false promises made by MLMs. You can make a lot of money real quick. Anybody can do this business. All of this is BS that they try to sell you on. So continuing on, what is multi-level marketing? Let's make sure we understand that in context insurance. Okay, I'm just talking about life insurance. Okay, multi-level marketing to me, in the context of life insurance, it is projected towards people, or it's MLM basically means agencies that focus more on recruiting and monetizing you, meaning making money off of you, not off the sale, but off of non-sales activities, versus recruiting you to sell insurance. It's a mouthful. In other words, if you join an agency and the emphasis is equally as important, if not more important, to teach you to find friends and family to recruit, or the emphasis is on selling you something that you have to buy in order to first do something, then it's probably, with more of the emphasis on MLM, or more of the emphasis on recruiting, probably more of an MLM. Now, it's not true across the board. For example, in our agency, you got to buy leads. I don't think we're an MLM, so you have to buy leads. I don't make any money off of the leads, so therefore I'm not monetizing it. But there's a very, very well-known MLM out there. Starts with an F, and you already know what I'm talking about. Historically, they were telling and teaching agents to buy these leads that they sold for $9, $10, $11, something like that they acquired for pennies on the dollar. And they weren't leads, they were data points for people that never requested life insurance. And then they resold those leads over and over again. So imagine if you're selling 5,000 of these a day and you're making $10 per sale, that's $50,000 in sheer profit every single day, just hustling these leads to these unsuspecting agents who trust you, right? That is what an MLM does. They force you to buy something like that and make money off of you, monetizing you, so that even if you don't make a sale, they don't ever make money. The agent doesn't make money. The agency makes the money, but you don't. That's not the business relationship to be involved in. Hopefully that makes sense. Hopefully I made sense of it. You want to stay away from those organizations that are heavy on recruiting or make you buy BS leads that aren't really worth anything. Why is it mostly bad for new agents? Hopefully that makes sense, because they're making money off of you where you don't make money as well. Where a good relationship between an agency and agent is like in ours. I only make money when you make a sale. So I'm not monetizing you in other ways other than when you make a sale, whether you're buying leads or in our free lead program. So that's good for me. I'm not making money off of, a cut off of the licensing or a cut off of the pre-licensing or buying the license, right? Like I only make money, I only win when you win. That is the sign of a good agency. Everything else tends to be MLM. And if they're MLM focused, they're not going to be necessarily focused on you succeeding selling and you making a living on your own by your own pen, meaning by your own productivity. But instead are looking to work your network and milk those people for recruits or even sales, or use you as a way to monetize crap, which they present as gold. Otherwise, the leads that they sell, right? So again, if they're emphasizing recruiting over selling, run. Not a good place to join. You need to get good at selling first before you recruit. I'm not against recruiting. I'm against the haste at which agencies teach your agents to recruit. It's usually too soon. Low commissions. Guys, a lot of these MLMs, terrible commissions. There's a well-known, again, MLM out there. They've recently lowered their commissions starting at 80%, and that's just for their top product. The rest are in like the 50, 60, 70% range, and they're forcing you to buy leads that are 10, 15 bucks a piece. It's not good, guys, okay? So low commissions relative to what the going averages are, right? And for me, my opinion is if you're buying leads, you should be closer to like your main carriers, closer really to 90% to 100%. If you're on a free lead program, 30 to 50% is what I would say is fair, okay? And again, there's wild differences in agent experience. And this is why, again, I'm biased. I can't help it. I think what we do is great for the new agent because we focus on selling over recruiting. But you may join an MLM that has an agency that's dedicated to selling over recruiting, but you don't really ever know that going in because they all say they're focused on developing you and helping you make a lot of money and showing you this opportunity of selling insurance. You don't really know until you're in, which makes joining these MLMs a risky endeavor for your career, which is why I just say run and avoid them. And arguably immoral business practices, guys, when it comes to this whole reselling garbage leads that aren't really leads, knowing what they're doing to make a huge cash cow profit off of you, that's immoral. It's not good. It's not good for our business. It makes our business look bad. It burns and screws a lot of people that never should have been burned or screwed. And it's really taking advantage of the ignorant, which I think we as agency owners in our position of having knowledge shouldn't do. For the sake of making money, where's your soul, man? Is all I have to say. So stay away from the MLMs. Number 3, lack of training. This is a big reason why people fail. It's because they just aren't trained well. Mentorship and training is critical to your success as a final expense telesales agent, guys. One thing I will say here is that this is like a Gilded Age type of learning process. You need a master who has done this thing teach you as the apprentice, and you work with as you apprentice with that master for a period of time to learn the craft until you can do it on your own. You got to have that mindset coming into this business. I have seen agents turn around their business because they finally find a mentor and a coach that will tell them the truth and to constructively criticize them to get better and to improve. Why the MLM model encourages poor training and mentorship opportunities? Well, the bottom line with MLM, and again, this is most of what's out there, they encourage it because they're not necessarily interested in you selling. They're interested in making money off of you, knowing that there's some people that just make money making sales anyways, but there's a middle group of people that they'll monetize off of with these sham leads and other things that, they're not too concerned about it. And other times, there are MLMs that use you and specifically your contacts, and you're the lead generator, where they will make sales to your leads, your contacts, but you don't necessarily get a cut of the action until you go through training or whatever BS they tell you. So again, you could have made those sales, like in most traditional models. If there's a sale to be made, it's you making the sale and you making most, if not all, the commission. But there's MLMs that don't do that. They feed off of their people and monetize their contacts without cutting them in on the deal, which is very, very bad, contributes to failure. Number 4, no prospect generation system. Guys, final expense, your leads are the lifeblood of your business. Your prospect is a lead. A prospect is somebody who is interested or could be interested. A lead is somebody who has expressed interest. You have to have these to have a business. If you don't have leads or prospects, you don't have a final expense telesales business. You're already failed before you know it. So you have to, when joining an agency, make sure that part of that process comes with a system, a turnkey system that puts you in front of good prospects, okay? Again, I can only reference myself. In our free lead program, we have developed a phenomenal system to generate high-quality prospects and leads for our clients. So all they have to do, our clients being our agents, have to do is just pick up the phone and dial and close them. For our brokers, we've developed the Alpha Lead system to get them in front of high-quality leads without having to worry about learning how to generate leads on Facebook and dealing with that whole hassle. So that's our setup. There's other setups that have maybe direct mail leads or TV leads. But you should know this before getting and joining into the agency. How is their approach to generating leads? Because you need to have that to be successful. Number 5, this is again something I've learned as I've run a mostly broker-based business where the agents buy their own leads, and now into a free lead system, is what I call entrepreneurial shock. Entrepreneurial shock, it's a term I made up myself. It's the idea that the fantasy and the allure of entrepreneurship, man, I'm gonna have freedom, independence, I can do what I want and make a lot of money, is not actually reflective of reality. The reality of being an entrepreneur is, guess what? You don't have any freedom. If you want to make money, you're going to be working your ass off for hours and hours on end. You're going to be on the phone. You're going to get rejected. You might have to buy your own leads. And now you got to explain to your spouse and your loved ones why the savings are deplenishing, right? And the whole process of being thrusted into the world and realm of entrepreneurship, it's a shock. And a lot of people fail out because of that. For example, there's income inconsistency. If you've been on a wage your whole life and you move into a role where you're on a straight commission, it's a shock. Or the threat of income inconsistency, it changes your behaviors that you otherwise wouldn't have if you knew there was a guarantee on your income. Taxes. This is a big one that hits the productive agents. You got to pay quarterly taxes, ladies and gentlemen. Uncle Sugar expects that. And also, the other half of FICA Social Security you have to pay for. Your employer, now that you don't have one, doesn't pay that half. So there's a little bit higher taxes initially. Granted, you can deduct your lead costs and other expenses associated with your business, but the taxes do kind of grab everybody by surprise. Another thing is a lot of agents have a paycheck-to-paycheck mentality. Being an entrepreneur, if you're going to go full bore, even if you're just doing free leads, you're going to have to manage your income. You can't spend every dollar you get, ladies and gentlemen. There's no guarantee you're going to make any more money tomorrow. There's high likelihood you will if you follow the system. But you need to be saving your money. You need to be padding your bank account for the up years and the down years, the up weeks and down weeks, right? And if you don't do that, you live this paycheck to paycheck mentality, you're not going to have the staying power in the business, even if you're on a free lead program. Now, the way to significantly reduce entrepreneurial shock and increase your odds of success, in my opinion, is that you have to really have to consider the free lead program. There's no way to get rid of the fact that you're on a straight commission. There are some people who don't do well under that, understandably, but I can tell you this: getting rid of the shock that comes with managing your lead budget makes a huge impact on a lot of people. Again, our agents in our free lead program, as of presently, average about 19 to 20,000 in production a month, whereas our agents in our broker, actually the average agent across the board throughout our agency averages around 8,000 to 9,000, somewhere in that range. So almost more than double production are coming out of our free lead agents compared to the average, which also includes a free lead agent. So the average is probably a little bit lower than that. So what's my point in that? Well, the free lead agents, I think in part, because they don't have this entrepreneurial shock as much, and all they have to focus on is selling, they get more done and thus make more money, which seems kind of inverse. But the point is, becoming an entrepreneur is not all rainbows and sunshine. It's not all fun and games. It takes a high level of commitment. It takes a high level of focus and consistency. And you need to check yourself about this stuff before you get into this business, because this is a reality no matter where you go, free leads or buying your own. Some other realities of selling final expense and why people fail out. There's something called chargebacks. Chargebacks are the monies that you were paid that now you must repay because your client lapsed before the advanced debt paid off. So a chargeback is an advance is a loan, and the collateral that backs up the loan is the policy. And as soon as that policy lapses, if the advance hasn't been covered by the premiums the client has paid, then you owe back whatever portion hasn't been paid. And so what agents will do is they oversell. They push product too hard, and they force people to buy that will just frankly cancel sometime into the future. And that causes what you had earned to now be a debt that you have to pay back. So how you sell and what you sell greatly will diminish the impact of chargebacks, but they do cause agents to fail. Handling rejection. Your life as a final expense telesales agent is about handling the rejection that you will get on a daily basis. People are going to say some of the wildest, nastiest, and meanest things to you on the phone. You might as well just accept it now, that they're going to say all sorts of crap. But you shouldn't let that deter you personally, because it's not personal. These people are just unhinged, and you just happen to hit them on the worst time available so that they could show you their true selves. But it shouldn't be something that you take personally. But even as I teach this, and even as I explain this logically, some people just cannot handle getting put down constantly, even though they'll end the day with a couple of sales if they just follow the system. And the last one, this is interesting. This is kind of more of a longer term issue with more advanced agents, is boredom. Remember how I said earlier that final expense is a simple business? It is. But if you are the type of person that likes to complicate things, or you're a creative personality, this business becomes boring. You literally will do the same thing on your first day as you will years later into your career. And if you don't have something to keep your mind busy, you might start to do what a lot of these guys do. It's like, oh, I'm going to get into crypto now, or I'm going to buy real estate, or I'm going to do this or that. To me, those are problems or distractions from optimizing your business and where your skill set is. Not to say that those are necessarily bad, but the distractions end up diminishing the capability from their prime money-making activity, which invariably means they make less income and sometimes fail out of the business. I've seen this happen a number of times with people who do predominantly well. So this is a first world problem. It's not like, a real problem, but it is something to manage, because as a performance-based individual, now that you're a salesperson selling final expense over the phone, you got to manage the headspace. That's a lot of the problems that cause people to fail. Okay. All right, let's take a little break here, guys, and answer your questions live. Let's see what you guys have to say. Darlene says, I already paid for a year of advertising in our church bulletin and 2 of the local senior center newsletters. Will I receive the same commission as free leads? Yeah, absolutely. We don't change your commission no matter what you're spending your money on. We don't want you to spend your money on leads. There's no reason to spend your money on leads, Darlene, if you're in a free lead program. Like, why would you do it? And we don't have an avenue to give you higher commissions with self-generated leads. The free lead program works independently of everything else. It's designed for people to focus in on that and not anything else. And I apologize if I sound rude. I certainly don't mean to be. But yeah, I just want to be clear on that. If I closed at an average of 25% of assurance where they weren't actually looking for insurance, do you think the free lead program would be a good fit? Sure, yeah. I think possibly. Yeah. What is the average length of time that agents stay with your agency? We did a retention study on our free lead agents. And in February, it's been a while, it was 72%. Maybe it was March or February. It's lower now. It's probably, I don't know what the number is, but even if retention is 30 or 40%, I would feel pretty good about that. I think we'll end up higher than that because the retention industry-wide, like I said, is probably 5%. What company is that you say starts with an F? Well, I can't say that. That's why I said that, because they will cease and desist me. That's true, Rob. Do your agents use a soft phone? Yeah. Well, I mean, that's what dialers are for, like Kixie. Do you have TV leads? No, we don't do TV leads. There's some content on my channel if you want to watch why. We'll get into it on the lead side, why we don't. How many agents are currently in your free lead program? 50 or so, Veronica. How many leads on average can an agent expect to receive each week on the free lead program? Brand new leads, brand new agents, 200 to 300 age leads, but a lot of our agents are closing age leads every single day. So there's some good quality of prospects in there. And then eventually fresh leads, up to 150, 200 a week, depending on your performance and what your percentage of close rate is. Initial training is 2 weeks with us. Classes are on Zoom, videos, et cetera. We don't work in Canada, Eli, unfortunately. Okay. All right, 2 hours in. We're not even halfway done. Soon enough. Okay, let's keep going. Okay. So let's talk about the steps in getting started on the right foot in this business. Now, the purpose of this is, let's say you've done some due diligence. You're not deterred by the bad side of this business. You like what you see, the long-term opportunity. Well, what do you do to get even licensed? So we're going to briefly talk about this for the people who are just unsure of how to do it. So first thing you're going to do is just Google search how to get a life insurance license in your state. Don't actually put your state in there. Put in the state you live in. So for me, I live in Tennessee. I'd put in how to get a life insurance license in Tennessee. Just follow the directions they give you, okay? That there's some resource for your state listed. When you do Google search, it will tell you exactly what to do. Just follow those steps, okay? Next step is to sign up for pre-licensing with Excel or ExamFX. These are two pre-licensing courses that are required in all states before you sit down for your exam. They will essentially prepare you to pass the exam. They're well worth the investment. Next on the list here is take the practice test several times with the pre-licensing until you're scoring a high grade. Typically, you want it well over 70%. Next here, we're going to pay and schedule the life insurance license test with your local proctor. You got to usually go somewhere to take the test. They won't let you take it at home. Kaplan or Pearson VUE are kind of the normal ones. But the way, again, you should do it is, where do I take my life insurance exam in Chattanooga, Tennessee? That's what I would put in. You put in your city and state, and they will tell you. Then once you schedule that up and pass it, you follow your state's guidelines to applying for your license. You got to usually get fingerprints. You got to pay for that. You got to pay for the license application and do a background check on you. By the way, cost-wise and all this, probably $200 to $400, okay? And then that's it. Usually, once you apply, you wait a couple of weeks tops, and then you're a bona fide life insurance agent. So welcome to the business. Now, at this point, I'll just skip taking questions because I wanted to get that in there for anybody who's considering this and wants to know how to get your license and what you need. So hopefully that covers that. Now let's talk about the strategic considerations to make as a new final expense telesales agent. So this is where we get into some of the strategy, some of the stuff that new agents are ignorant about. And I mean that with all due respect. I'm not trying to insult anybody, but we are relieving your ignorance actively, hopefully today on our presentation. The point here is we don't want you to make a mistake when joining an agency and thinking it's one thing and then it's totally something different, right? You need to be well informed on how this business works to make good decisions about your career. And so hopefully we will empower that with what you're about to see. So let's first start off with how to pick a great agency to partner with for life. And the way to look at this is to look at it like a marriage, right? Hopefully you want to be married for life. And the spouse that you pick, you want to make sure as much as you can, nothing's perfect, but you want to pick as much as you can that a keeper. Because part of the problem in this business that agents cause problems onto themselves is they don't do a good job of doing and picking a good agency partner, and they bounce around a lot. I did early on. It has an impact on your closing, your commissions, your carrier availability, and your production suffers because of it. So we want to avoid that. So here's what you need to look for when you're doing your due diligence on agencies, who to join. Evidence of success. It's not enough to say, my agency is the best. That's what they all say. You need to go a step further. You need to look at case studies, testimonials. For example, shameless plug. In our website, we have dozens of testimonials and dozens of case studies of in-depth analysis on multiple agents who have written a lot of production and final expense telesales with us. Why? Because I want to have a preponderance of proof that you can believe in, that we know what we're doing, and we're a good agency to join. But if you find agencies out there, like there's agencies out there that have websites, they don't have a single testimonial, you don't even know who the owner is, it's like, why should I trust this person with my livelihood? Okay? Again, I like a preponderance of proof. If I'm going to do anything, I want to make sure that people believe it, and there's enough testimony saying that what I heard from the recruiter actually is true. Also, can you reach out and talk to active agents to discuss their experience with them? This is really important. I've always told agents you should ask for 3 references before you join any agency, even mine. And when somebody asks us, we will happily give you the name of 3 different agents, usually just an email, where you can email them and say, hey, I'm a new agent potential. I just wanted to ask you a few questions, see what your experience has been with the DIG agency. And then I don't want to get in between that conversation. They can have it privately. Because I want them to vet us. I want them to make sure that what I said and what our team said is true in the experience of the agent. And then I want the agent to tell them the good, bad, and the ugly too. But what's good about the business, what's bad about the business, et cetera. Because we don't want to bring in an agent that, it's just not a good fit and it wastes all of our time. It takes up a lot of mental space, right? So you should have the ability to reach out and talk to active agents to discuss their experience. I think when you do that, you're going to find that it's going to be more successful for you, and you're going to eliminate problems up front a lot. Also, there should be a commitment to transparency about what to expect, how onboarding works, who's a good fit, who isn't a good fit. Sometimes it annoys the people who are looking to join our agency that we require to watch these videos and come to a Q&A call and then interview with us after they apply, and then maybe do a second application before they interview, and then wait on us. But we do all this because we want to be transparent, have multiple checkpoints along the way that what we do is a good fit. Because nothing upsets us and the team more than bringing on a person that, I didn't know I had to buy leads. That usually doesn't happen with us, but I didn't know this or that was going to happen, because it's just frustrating. It's a lot of wasted man hours, right? So commission transparency, it should be clear what commissions are, what you can expect to get paid, generally speaking, for the products and services that you'll be writing. The expectations, you need to do this by this date. You need to perform at this rate for X amount of time to be considered for promotion. Or if you don't perform, we'll let you go. The more transparency around expectations, the better. And communication transparency is really important too. This is a big one. This is a big one. And we all suffer from this to various extent, but I'm huge on this. A lot of problems, just like marriage, can be solved if you just communicate with your partner, right? In business, if you communicate your problems early on with your agent or your agency, a lot of the problems that would have manifest go away. But a lot of people that I've seen, many agency owners ignore problems. They're not good at communicating in a timely manner via email, text, phone, Slack, etc. You want to have a commitment to communication. There's no perfect agency. We're not perfect for sure. But we are committed to, when there's a problem, fixing it and communicating what the solution is going to be for our people. And having that in place is really, really important. Good agencies also have a proven lead program. You only want to join an agency that has a proven lead program that many active agents are currently using. Don't be a guinea pig, okay? There was an agency in the annuity space. He wanted to try out a brand new lead program that was completely unproven. He wanted my thoughts on it. I told him, you're insane. Why would you take something that you don't know is going to work or not and then ask people to put their money up for it? Like, you have to protect them. You're almost like their advisor, right, to the agents. And you want to put them in a position where they're safe. There's no guarantees in life. But the nice thing with what we do is, hey, in our free lead program, for example, all of our agents are using the same system. We can show you evidence of success. And it's not just one guy is doing it. Like, look at all these people who are writing all this business. There must be a high chance that it would work for you too. So you should be able to see that, and it should be proven and shown by the agency you're looking to join. Training. Examples of excellent training that good agencies provide include personal mentorship. Do you get one-on-one training in some form from your trainer? That should be absolutely required. Are there foundational resources like sales scripts, underwriting guides, opportunities for meetings, and video training tutorials? You should have a combination of all of this. Resources that you can a la carte and review on your own, and you're not always necessarily dependent on one person to provide it to you on demand. Another thing here is bewaring the fine print and the typical contract issues that final expense and telesales agents face. So this is another strategic consideration that, man, it is so important to understand getting into. So many agents get screwed and shorthanded because they don't understand the business arrangements that are unique to the insurance final expense space, and then get stuck in what they thought were opportunities, which are just like anchors attached to your neck. Okay, so let's talk about line of authority contracts. What is this? So a line of authority contract, or a license-only agent is another way to say it, is a contract that says that the agency is going to pay you, not the carrier, okay? So in a we call it a in a position where a normal contract works is that when you write a piece of business, the company pays you, okay? Meaning the carrier. But with an LOA contract, what that means is that you will be paid by the agency. And it's not necessarily bad, but what happens is that now you're in a position where the agency is in control of your money. You usually don't own the book of business either, meaning you're not, if you quit and you're owed maybe the back-end commission that you weren't advanced, you won't be paid that. And again, it's not bad. In most cases, with most structures, it's not a good thing. But you need to understand, if you're in a position with an LOA contract, you might not ever own your business. You might not ever take all the commission that you closed based off of how that contract is designed. So again, what's the pros of it? I don't know if there's necessarily any pros to the way it's designed. It's more of a pro to the agency in order to manipulate commission levels in a way that's more advantageous to the agency. But to the agent, I don't think there's really any pros. I wouldn't say it's necessarily inherently negative, but in many cases it is bad because the agent doesn't understand how the LOA contract plays in the long term. They don't understand they're going to lose their commissions if they quit, and they find all this stuff out after the fact. So it becomes negative because they weren't informed up front. Unreasonably low commission levels. This is another thing to be worried about. How to tell if commission levels are offered are unreasonably low. I'm arbitrary about this. Anything under 70% and you're buying your own leads is usually not a good deal. Commission levels where you're paid an hourly wage, that doesn't really have to be bad. And a small commission, I wouldn't recommend it. I prefer a straight commission, but lower, like, or a little higher, 30 to 50%. These are the ones you got to be worried about. Generally speaking, if you're buying leads, and this is where this is of most concern because you got to control for the costs, 90 to 100% is kind of where I'd want you to be as a minimum amount, okay? Another thing to be concerned about, no ownership of business or future renewals. Vesting is what this means, so it's who owns the book of business. And there are agencies out there, guys, where you don't own your book of business even though you're buying the leads. And if you leave, all those commissions get rolled up to and earned by the upline. So there's a very big organization out there that requires its agents, and they're on YouTube, actually a pretty good channel. But the way their company works, if you look at the contract, you don't own your business for 2 years. Now, in this model, it's a little less of a concern because there's free leads offered, but they also make you do the same thing when you buy your own leads. So I had an agent once who was going to move over to us, and he was in one of these positions where he wrote all this business, and they tried to terminate him about a month before the 2-year vesting period was up. And he luckily contacted the company and worked a way around it. But he was going to lose, get this, $30,000 in future commissions because of trying to game the system on the agency side to terminate him early before the 2-year provision was up. Okay? So the short of it is that when you're not vested out the gate, you don't own your book of business. And usually by the time you find out about this, you're like, man, it's going to cost me a lot to make a better move for myself, so I'm just going to buckle down and figure things out. And ultimately what happens is a lot of these agents quit, and they lose a lot of that back-end commission they would have otherwise earned. And again, where I see this as being the biggest problem on vesting is when the agent is paying for the leads. They're paying for the leads, it's coming out of their pocket in some form or fashion, and they don't own their business either. I mean, that's kind of crazy. They're paying to get their business, but they don't own their business. That's where I have the problem with it. So what you lose if you're not vested, we cover that. Releasing, this is another provision you need to take a consideration with in asking the agency you're looking to join. A release is a provision to move your carrier contracts to another agency. So there are times where your relationship with your agency just may not be a best fit for you. For example, I had an agent this morning, longtime agent. He shifted into Medicare. We don't really focus on Medicare as much, but we've had contracts over time. And he's making a strategic move to go to another organization that's like me, is completely focused, but on Medicare, whereas I'm focused on final expense. And the way my business works is that we grant the release. So I said, you know what, that's fine. Makes complete sense why you're doing this. Here's your release. And we started the release process. So that way, he's not tied with us getting zero help or not as much help as he thinks he needs on the Medicare space, and is going to go be able to do business elsewhere and get the help and support and service that he needs. So the point is that as an agent, having the ability to get a release is an important plan B in order to make sure that you don't lose your ability to conduct your livelihood. Again, there are people that run large YouTube channels that are right now making good content that seem like they're great, that when you look at the contract, you cannot move the contracts for a number of time. They say so in their contract. This one contract had a non-compete for 5 years, which to me is asinine. It's unenforceable now with the FTC rulings on non-competes, but still, they won't release when you ask for them. Why? Because that's how they roll. And they make these videos about MLMs and how bad they are. And here they are preventing agents from doing business. And look, sometimes a release, not giving a release is fine if the agent owes chargeback debt that they're not paying or there's some kind of resources invested in them. But you got to ask about this stuff because they usually don't tell you up front. And we've always been committed to releases because I'm committed to the agent. If you're not in a good fit here, I don't want to hold you back. It's kind of how I look at it. So that's why it's important. Another thing you need to consider is captive versus independent. So a captive agent typically is with one agency, and in most cases it's one carrier with one agency. Whereas an independent agent, we'll get to that in a minute, has many carriers and sometimes can be broken up with different agencies, but the main difference is it's a one carrier agent is how I would describe a captive agent in most cases. The pros to a captive agent is that it's easier to learn the final expense product. You got one product to learn, and all you do is spend your time learning that one product versus many. It simplifies, in a sense, the process. But the downside to me, and I'm biased, I believe it's not worth the pro of simplification, is that you lose a lot of sales capability. You don't have options like you do if you're an independent agent. You have to push one product. You're a product pusher. And that product isn't going to be the best in many circumstances. You're also opening yourself up to getting replaced and having the policy lapse more often because many times the policy price isn't very competitive, and many times somebody can swoop in behind you and offer a more competitive price. So incidentally, a lot of these organizations have lower first-year persistency and the quality of business that stays on the books, which means less commission to you. So I'm not a fan of captive, although if you're just stuck on doing one carrier, go do you, is what I would say. But I think for the vast majority of agents, you're better off having options So you don't have to push product, and you can get better price and coverage in place and keep more of your business and make more money, which is basically the pros of being an independent agent. And the cons of being an independent agent would be it's more complex. You got more moving parts, but most people can handle it. It's very rare that somebody's so incapable of juggling multiple products that it becomes a detriment. It's usually a huge value add to the ability of writing business and making more money. And that's why I chose to be an independent agent. I didn't want to push product. I wanted to offer my clients options. And I recognized inherently that better options means better quality of business, and that I'll keep more of what I sell and have more sales opportunities than if I had just one product that is not a good match all the time. Does it make sense? Hopefully it does. Let me grab some water here. Part-time versus full-time. This is another consideration you have to make when you get into this business. My story is, and this is the thing, because the way I run my business is different than I start. I'll tell you why that's the case. I started part-time in this business, face-to-face, moved to full-time after 6 months, then failed out, and then started a second time again part-time for a year before going full-time permanently after that. My story is unusually unique. Most people who fail out of the business never come back, and most people who start part-time don't succeed. And this is the observation I've had, that most people don't do or have the same extent of commitment that I did. I mean, I had a full-time job at a Fortune 500 company, and I worked 30 hours a week selling final expense. I was never home. I worked every Saturday. I was only home Sundays because I was committed to not being poor and pulling myself out of the hole I created the second time around. And I did not want to work for the man long term, and I really meant it. I knew it was possible running your own business and being successful in this business, and I was absolutely committed, but I find that 99% of people aren't, unfortunately, because the demands of a full-time job are just there, and I just had a unique, special situation that's just hard to duplicate. So for me, and what we do, and I recommend agents don't do part-time. We don't take part-timers for telesales anymore because of this, because it just requires all of your attention to be successful, and that's true of anything in life. You can't half commit and expect amazing results. And the thing is you can't really even expect half results. You expect like a quarter or less results, which isn't enough to justify the effort anyway. So my advice to you guys, if you're going to do this business, to make full-time work. And how do you make it work? You're going to have to take the leap of faith. You're going to have to, work every waking hour doing this, and then working in a part-time job. You should make this your full-time job and then find something else like Uber, waiting tables, side hustles, gigs, etc., to make up to do the part-time. You should be looking at this as the full-time and then do something part-time. And there's just no easy way around this, guys. I mean, I don't really have a perfect solution that's going to accommodate the part-time desire. It's just something you really have to make work, unfortunately. Telesales versus face-to-face, another strategic consideration. The pros to telesales is you never leave your house. It's also the cons of telesales. The walls are coming in on you. The close rates are a little lower, but the activity volume potential with telesales makes up for it. I mean, our top producers are all telesales now. Whereas the face-to-face pros are, you close more of your business, but there's drive time, there's wear and tear to your car, there's time to get to your leads, unlike with telesales, and you're in some squirrely situations with some of the people that are out there. I mean, if you've seen some of the things I've seen and smelled, you might just do telesales, right? So you also have to consider what your personality type is. Some people are made to be on the phone. And I think more people are good for the phone now than ever before because of the training that we have and the carrier setups now. And really the clients are acclimated to as well. But if you don't like that face-to-face, if you're a traditional belly-to-belly person, face-to-face is great. It's still a great opportunity to sell. The industry trends, this should be 100% clear. 90% plus of the agents getting this business are telesales now. I'm falling short of saying that face-to-face is like a legacy strategy, meaning like it's like dying, because the people who do it and really commit to it can do very well because there's less competition face-to-face. But the interest level is absolutely in telesales, and all the resources and the
arrangement around the business and final expenses is oriented towards telesales. And the advantage of telesales, in my opinion, it's way easier to do free lead programs if you're looking for a free lead program to accommodate for the agent. You never have to leave your house. You're with your family more often than you think. And you don't have a huge expense with driving around in your car that you would if you're face-to-face. And you never have to step into these questionable circumstances, and if you're worried about that, what's the worst they can do on telesales? Just yell at you, Ideal carrier lineup. So let's talk about some factors strategically you need to consider when you're looking at carriers for final expense. Again, we talked briefly already about the one versus many strategy. I'm a big fan of the one versus I'm a big fan of the many strategy. Have 3 to 5 carriers to start with versus one. One product is not enough to do well with this business. You'll pass up on sales, you'll lose deals, and you won't make as much money. So my advice is to have 3 to 5 carriers that are both good on pricing, flexible on underwriting, and at least one guaranteed issue carrier that will take anything you get of it because health is bad. You want a smooth signature process, verbal or text to sign for telesales. So don't depend on DocuSign, terrible idea. You want to be able to verbally sign along with your client verbally signing on the phone, or better yet, I think is superior, a text to sign option where you get a signature process texted to the client. If you're doing telesales and you're getting Facebook leads, they all have cell phones, they all text. They can do those pretty simply. And they sign with a unique text signature, and that acts as a signature. It's very simple to do. You want to use one or the others. Verbal's a little bit more lengthier, but it does work well. But stay away from DocuSign, not a good idea. Or a signature process that requires the client to get on the computer independent of signing it immediately with you. With your carriers, use carriers that have instant decisions, no exceptions. So there is one company, and I'm refraining using companies at this point in the presentation because things do change. But there's one company in mind that about half of the submissions for coverage would end up in a rate up or refer to underwriting or decline. And on the phone, your clients are fickle. They may be in a position where they're tired of being on the phone with you. They don't want to go through another application. It just seems like a huge time suck, and they'll just hang up. And why would you send half your business just to be declined or just not to get issued? Because that's ultimately what happens. So you don't want to use carriers like that. Instead, you want to use carriers that the vast majority of the time give a decision immediately, okay? That even if it's declined, you find that out, and you can pivot to another carrier. You don't want that to be referred and sent somewhere else where it may or may not be approved. Use Social Security deposit billing as much as possible. Social Security deposit billing is when you draft the money on the exact date that your client gets his or her check from Uncle Sugar. So usually that's the first of the month, third of the month, or the second, third, or fourth of the month, okay? So the reason we do that is that our clients sometimes like to take all their money out and forget that they've got a bill, they've got to auto draft from their account. So when we can line up that payment to the exact date in the early morning when that check hits, there's a higher likelihood we'll successfully collect the premium. So you want to use carriers that do Social Security deposit billing. I would say about 40 to 50% of the carriers do that now, so it is pretty normal. You want a guaranteed issue carrier that can cover questions or clients without asking questions for for clients with bad health. You want clients with approval rates or carriers with approval rates that are high, meaning that you can dependably know that the client is going to get approved. Kind of already referenced that earlier. The prices have to be competitive. You don't want to use carriers that have all mid-range or higher prices. You will get replaced in this business. You don't have to have the low price every time, but you need competitive, 50% or lower competitiveness all of the time with your carriers. Because, like for example, one of our better carriers has a year-to-date 99% persistency on 541 applications, which means like the stuff sticks when it gets approved and the first payment is collected, okay? So that's how you keep business on the books, is you just can't ever get it off of because it's so well priced. And have a diversity of underwriting options, which you'll have by design if you have multiple carriers. Again, another strategic decision here. I don't think you guys, if you're going to get in the final expense telesale seriously, don't cross-sell. I got into cross-selling as an agent about 6 months in, cross-selling Medicare, and it just distracted from my final expense business. I didn't do well. I lost business during final expense, and that was part of the reason I failed. We also cross-sold at some point as an agency, or at least teaching agents how to do it, even though I gave them buffers of about 6-12 months. But what I found is that even good agents that get into cross-selling, most of them never succeed long-term. I can count on one hand, maybe one finger, of two agents in particular that cross-sold or worked from final expense to Medicare that are still successful today. And this was over the past 5 years. It's just the failure rate of cross-selling is just, people make it sound out like it's really good, but cross-selling exponentially complicates the business. And most people are just better off selling one thing and being very good at one thing. And that's why we pivoted back to, and incidentally, like I said earlier, we had a year-over-year growth in our production of 325% thereabouts from April 2023 to April 2024 by just focusing on final expense. Lead strategy. How are you going to do your leads? Should you buy them? Should you get your free leads? I bought my leads on my own. It worked fine with me, although there are times when I got experimental. That was a part of the reason I failed out the first time. I created my own lead piece. It was a disaster. It got some sales, but not nearly as good as the tried and true method. Yeah, but I handled leads okay. But my experience recruiting, as I've mentioned earlier, is that most agents struggle with buying leads. They're emotional about it. Their spouse is emotional about it. That leads them to make bad decisions, like skipping leads or buying other leads and getting away from the systematic approach that you should follow. Instead, it's probably better because of that to consider, and because of entrepreneurial shock, is to consider buying your own leads, or I should say free leads, getting your free leads provided to you. So you don't have to worry about the entrepreneurial shock or the processes or the shortcomings of buying leads. CRM, software and equipment considerations. So a CRM is your customer relation management tool. It basically is what stores your leads, where you can call from, make notes, follow-ups, etc. You absolutely need to have one in telesales. You don't necessarily need one selling face-to-face, but in telesales, it is non-negotiable, okay? I like anything that's go high level. We have our own custom-tailored go high level dig agency CRM, which is fantastic for our agents. But there are other options out there that are really good as well. Additional software needs, you need a quoter, like Insurance Toolkits or Best Plan Pro, to quote and underwrite your clients. And then also, and I think this is non-negotiable, get Kixie. You need Kixie to help screen your leads better so they'll pick up and get more of your leads closed. Hardware needs, you need a modern PC. Guys, if you're operating off of something 5 years or older, probably going to be a problem, so upgrade. Also, consider getting a second, maybe even a third monitor. The more real estate screen space that you have to keep up your script, your CRM, your carry applications, the better, the less overwhelming it's going to be. I recommend a direct connection to your computer, hardwired in from your router, as opposed to wireless, because sometimes there are issues with that. And then a quality headset. Make sure you test the headset out on the CRM and dialer that you're using to make sure that it comes through clearly. Long-term agency goal considerations. Should you build agencies? Should you consider building an agency? The benefits are if there's a way to scale up the maximum amount of income in this business, it's through agency building. That's why I went this route. It has been a great decision for me, but there are definitely drawbacks from it. If you do it too early, you're likely going to get distracted from making money selling, which is going to lower your overall income. And even when you do it later in your career, it's going to detract from you selling. So it's going to lower your income. And typically the agency building process is a multi-year process. So you won't see the return of that investment over the immediacy. It's going to take years. So don't give up on personal production if you're going to agency build. That's a big mistake. The other drawback to doing agency building, and this is part of the reason I don't like new guys doing it, is that you co-sign the advance debt that your agents write. So if your agents lapse coverage and they don't pay it, you're paying it, okay? And there has been fraud that I've experienced in my agency where I've been left with $100,000 in chargeback debt, right, from just 2 or 3 agents, right, within the last couple of years. And this is a risk that you carry, with the upside reward being, well, you know, every month we have more than 200 agents now writing business, and I keep a significant percentage for myself, although it's not the majority. it's significant, spread out over hundreds of agents now. It's very, very lucrative in terms of income. And this is why I went the agency building route to focus on one product and not cross-selling for me, is because the skill set was there for selling final expense, and to train people, I already know the product, so I don't have to learn something brand new and cross-sell and complicate matters. I can do what I do well and then teach others what I know how to do well. And for me, that's why I went that route to expand my income versus cross-selling. All right. So we're getting to the bottom half of this. Let me pivot here and take some questions from you. Lot of information to cover there. So questions, feel free to ask them before we get to the next part. Might take a few minute break here myself. I'm entering brain fried mode. If you don't do a lot of live streams or videos for a while, after like an hour or two, it's like your eyes start to gloss over. So if you've got any questions, strategic questions about selling final expense over the phone, now's the time to ask them. Yeah, Miria, I would recommend finishing the videos to be able to apply to our agency, just because you need to be prepared to what to expect. We don't want you to come in, interview, ask basic questions, and then find out it was not a good idea. So yeah, watch the videos. How are phone calls made? With the phone? Just kidding, Chris. With Kixie Dialer, I mentioned a couple times. David, do you have the same freely program for your Medicare division? No, we don't do Medicare anymore. I'll entertain agents who are experienced brokers to cross-sell Medicare, but we really don't push it at all. It's a distraction. Rennie, hey, are you non-compete? So nobody can ever tell you that or have you sign a non-compete anymore, period. The FTC came out with a ruling. I did a video on it a couple weeks ago, and it says that, look, if somebody says you can't do business in this space for 2 years, that you can tell them to shove it, and you can sue them. Non-competes are entirely wholly illegal. However, agencies not letting you move your carriers because they won't release you is legal. Under your Freely program, is an agent fully vested? Yes. Thank you, El Jefe. Thanks, Terry. Chris, I've worked for 3 of the big IMOs around today. Just got appointed with Dig. All right, man. Glad to have you. Yeah, Laura, we're the master of one. That's us. 10,000 kicks of the same type of kick is better than knowing 10,000 kicks, only practicing it once, something like that. Do you sell and teach how to sell IULs? No, we are not an IUL organization. IULs and final expense don't cross over very well. How many hours a week does Jay work? 50 to 60. Yes, Jay is on our channel. We've got another one that we're working on that I interviewed him in Houston that we'll have published too. How soon before we hear back from someone at your agency? It's usually a week and a half till you get it. It's a week total turnaround, so I'd say a couple of days, Darlene. Please be patient. We've just had a ton of people especially from the Assurance IQ people that have been fired that are looking for work. And so it's just been super busy. Release needed from both agency and carrier? No, just from the agency. You're welcome. What about the pre-need product? How does it compare with final expense? Hey, Hitesh. It's similar. It's a beta test product, really for the face-to-face side, so it's not really applicable here for telesales. But look up pre-need final expense Duford on YouTube, and you can watch the video we had up. Yeah, multiple answers. I don't know, but it is handled. It's no worries. Thanks, Peter. Thanks, Darlene. Okay. Let me take a 2-minute break here, guys. I'm going to go, watch out the window. Let my brain cool down here. Because let me see where we're at here. Preparing to do battle. Got all that to go through. Mindset. Leads. And then script. And then putting it together. All right. So we're getting close. Probably going to be here till 4, guys. So thank you for your patience. All right, where am I? Okay. All right. Oh, a couple questions here. Can you tell me about... Okay, so can you tell me the ABCs to be ready today to start the training, start making phone calls, and finally start making... Yeah, that's why you're here. Thanks for being here. Go back and watch the earlier stuff, though. That might be helpful. We did last year. I'm probably going to do one next year, darling. That's what I'm thinking. We do these road shows, which is kind of like a mini convention. It's half half the time it's the agents and our agency getting together and hanging out, so those are good to go to. We're going to be up in Chicago in 2 weeks. By the way, go to digroadshow.com if you guys want to get a ticket. Come to Chicago, June 7th. And then where else are we going to be? I know we're going to go next in August, September, October, November. We're going to be in either Miami or Tampa, LA, Dallas, and maybe Nashville. Maybe Nashville, yeah. All right. Okay, we're back. Thank you, Laura. Appreciate you, Laura. Checks the mail. Okay. Let us continue. We're plodding through here. Getting through good. So what's next on the list here? Oh, good. Yeah, so what we're going to talk about now is what do you do after you've done your due diligence? You've found an agency that you wanted to join, matches what you want. Final expense sounds great. You know if you're going to do free leads or telesales, all that's fine. Well, what do you need to do now that you're getting onboarded? More specifically, what can you do that's been proven to work to onboard and prepare you as much as possible in the least amount of time? And so that's what we're going to talk about today. And I'm going to be referencing what I've been studying that our top producers at the Dig Agency have done to be sales ready, and I would say 14 days or less. So let's begin on that. So one of the big things you can do getting started is role play. I highly recommend that, again, with telesales, it's all about the script. It's how you read the script and then making sure that you do the script as it is prescribed. But you've got to do multiple iterations or reps of it to make it work successfully. So you want to grab somebody who's brand new, maybe your trainer, but also brand new, and role play the script with them. Have somebody act as if they're the prospect and the other act as if they're the agent, and then vice versa, role play back and forth. And to do this a number of times, to go through the script, deal with objections, work on your tonality, get some feedback from the other person that's listening. All of our agents who are successful with our agency do some form and level of role play, okay? It's going to help you memorize and get comfortable with the script. Again, what we want to avoid in final expense telesales is feeling completely out of sorts on that very first day that you're on the phone working your leads. You ideally want to get on the phone feeling as comfortable as humanly possible because of the reps and the time and effort you put in to memorize, rehearse, and role play the script, okay? Number 2 here, and this is vastly important, is to record and review your role plays and your attempts to practice the script. Record yourself presenting, okay? And then listen to yourself. How does it sound? I promise you, when you record yourself selling, you're going to be shocked at what you missed and how you sounded and what learning opportunities that you'll get from it, all because you just simply recorded your presentation, okay? Again, we have our agents do recorded presentations 30 times before we'll get them on the phone. It sounds crazy. It sounds excessive. But the fact that they've done that 30 times and have submitted that to us, that's pretty powerful. They're going to be prepared when it comes to actually speaking to a real life person because they've gone through the reps and motions of memorizing the process to be as ready as possible. Another thing that we highly endorse is reviewing other successful agents' calls. So, for example, at the Dig Agency, we have multitudes of top producer sales calls, good, bad, and everything in between that agents can listen to and then hone in on how does their opening sound? How does their close sound? How do they deal with objections? When you want to be a top performer, you have to emulate what a top performer does. If you're not having access to top performer presentations, you're missing out tremendously, okay? And then also, you want to make sure that you are performing the script, not just rehearsing it, okay? This is another thing that's really important. Don't just read the script like you're, reading the lines off of a page. You need to imagine you're an actor on stage and you're performing the script in front of a bunch of people who some are in the front row who can see every emotion on your face, but also some are in the nosebleed section that can barely make out your face, right? You need to perform in a way that people can pick up on your emotionality, and that will help you connect with your clients that much better. And again, be the actor on the stage. Also, make sure that you know your fundamentals of carrier knowledge. You want to make sure, really important, know the underwriting advantages of the carriers. Really make sure to learn the basics of the carrier, like when the carrier started, the AM Best ranking, etc. And what you really need to spend most time on is learning the application process. Most carriers, if not all, have video walkthroughs of how to complete an application. Do that several times, because what you don't want to have happen is you close the deal, but you've screwed up the application because you don't know how to do it. A lot of these applications are pretty simple, but you need to have some familiarity, just like you do with the script, with the application processes. So moving on, now talking about the mindset for a successful final expense career. Like, what should you be thinking mentally to have sustainable success? This business isn't about having a one-off month of success and then expecting everything to be perfect. Like, we want you to have consistency in your ability to be successful. And so you have to develop some mindset characteristics that are going to get you there. So number one, it's important to understand that to an extent, final expense telesales is a numbers game. And what we mean by a numbers game is like, look, if you don't have the prerequisite leads, you don't have the prerequisite time on task, it doesn't matter how good of a salesperson you are, you're probably not going to succeed. And some people won't buy and some people will. So what? Move on, put the activity in, make the thing happen. And without having a volume game and a numbers approach to it, you're not going to be successful. The inputs always come before the outputs. So we like to talk about the money that we're going to make or the sales we're going to make, but the truth is, before any of that happens, it's the dials and the time on task that always come before the sales and the money. So what you really should be focusing on and working on is putting the inputs in, putting the dial time in, hitting a goal every day of how many calls you're going to take or make before you end the day so that you can hit your long-term goals. And what you'll discover is there's a direct relation between the money you make and the time and the calls that you put into it, specifically the dials, the inputs that you put into it. And that ratio can be determined at one point. Maybe it takes 50 calls before you make a sale, and you've tracked this over a longer period of time. Well, then that means if you want to make 200 or 4 sales a day, you need to make 200 calls. And you can track those inputs and depend on them with a level of certainty and appreciation. And having that confidence that your inputs produces outputs is very empowering. In the beginning, you have to have the faith in that process. But the takeaway here is always be thinking about the dials that you're making and the time you're putting into making things happen. It's also, final expense telesales is a skill game. It's not just about the numbers, because you can do the numbers but not have the skill and still fail. So understand that you really have to practice and refine the following if you want to have a level of success in the business of final expense telesales, the opening script. So we'll go into the script later, but you really have to captivate and capture the client's attention and keep it while overcoming their initial knee-jerk objections to what they may say about why you're calling and they're busy and they got other things going on. And you got to say this in a way that doesn't sound boring, but it sounds upbeat, natural, and effective all at the same time. You need to get good at pre-qualifying. Why does this client want a policy? What if it happens if they die and they don't have coverage? How did their family take care of that? You got to get good at asking health questions to make sure the client actually qualifies for the policy you have in mind. And you got to get good at closing. You got to get good at presenting the options, asking which one that they want to proceed with, and overcoming their objections like Social Security and banking information. And don't forget tonality. Again, don't just rehearse the script with no emotion. You almost have to get in character here. You have to have tonality. You got to practice that and develop the skill of that. Another thing that's really important mindset-wise is developing a long-term perspective into a minute-to-minute life. Okay, let me explain what I mean. We all live second to second, right? Like something happens, we react to it, and something happens again, we react to it, right? But in reality, success in final expense is defined month to month or even quarter to quarter. And we may all know this logically, that yeah, and what I'm trying to say is if I put the time in, I'll get the results, but they may not happen perfectly like they should, like in some sort of equation, right? But the reality is we all live second to second, and we may have a couple of really bad final expense calls that go nowhere, and we start to doubt ourselves, even though we're doing everything right. But the reality is that's how life is in the final expense business. You have to understand and connect the realities of sticking to something long term and overcoming the temptation to get frustrated in the short term. And the better you can get at this, the better off you're going to be. In other words, you must bridge the gap between your activities, the good and the bad outcomes, against the long term if you want to stay level-headed and focused. The best agents understand this and embrace this. They don't think minute to minute. They don't even think day to day. They just think, okay, here's my goal for the day in inputs, but I don't care about the rejection, the pushback, the frustration. I'm just going to put the time in. I'm just going to keep things going. You also need to have the ability to be coachable. This is really important for agents who join the Dig Agency. If you're not coachable, you are not humble, you're arrogant, and you're going to fail. Okay, that is not a good characteristic to have when it comes to a business like this. So humble yourself. If you want to do well here, expect to be critiqued. Expect to have somebody correct something you're doing wrong, and don't take it personal, okay? Just do what you're told. Don't come into this business as a brand new agent thinking that you're going to reinvent the wheel. Trust me, I tried it. It didn't work. And so have many others who have failed out. It's better to just follow the system if you've done your due diligence and it actually works, and to do it exactly as it's taught because it's getting results for them. So it kind of be stupid, as a new agent at least, to try something entirely different. Even if you don't agree with the strategy, and this is a big thing for me that I had to learn, as long as it's not illegal, do it anyway. Your way of thinking might be wrong. Again, it takes humility. And this is something I struggled with because I did things my own way. And as I grew in my business and as an agent and I taught others, I realized a lot of these things that I didn't like because they were too pushy were actually, there was a reason why you did them. And for me, it was because I was never taught why. So I had my own opinions about them. But really, the real crux of it was that I thought I knew better, even though I didn't have any evidence to show for it. Well, I had some. But the reality was I just didn't take anything on faith when I should have. And when you're starting off like this, it's really important to do this. Granted, you're with an organization you trust, with people you like, and what they say is actually true, right? There's a lot of conditions there, right? Because they don't do that, and you don't like it unless it's a little different, right? So, and as long as it's not illegal, right? All right. Also, you need to have the necessity of an indomitable work ethic. Like, this business isn't that technical. It doesn't take a lot of brain power, but it takes a lot of work ethic. You're going to have to spend a lot of hours to work and be on task in order to succeed. You're going to have to be good at not letting the short-term failures and frustrations stop your momentum. You got to put your time in. You got to put the inputs in if you want to see anything successful out of this business. All right, let's take some questions here real quick. Any questions on mindset? Anything else there, guys, real quick? We're going to get into leads, so lots to talk about there. Hey, David, what is the expected AP quota per week for a free lead agent? It depends on the agent. We want for a guy on or gal on free leads that are receiving fresh leads, 5% minimum. If they can't hit 5, then we plug them into age leads to make up the difference until they hit that, and then we move them back up. We have agents. I think a couple of weeks ago, our average close rate was like 8% out of 60 agents. You know, pretty powerful. But yeah, it's reasonable. Okay, so let's proceed here. I'm just going to keep going. Hey, what's going on, guys? Let's proceed back here. Okay, so now let's talk about final expense lead generation. This presentation is going to be perfect for you. If you're new to final expense telesales, you're wondering what kind of leads are working, maybe you're already experienced in the business, you're frustrated with what you're working, and today I'm going to deliver you my opinions and some facts about what's good for final expense lead generation. The goal here is to empower you with options and resources so that you can work successfully in the final expense space because, after all, leads are the lifeblood of the business of final expense, so you need to have good ones. Okay. So, fundamentals of lead generation. What is a lead? This is a good question. It sounds so basic, but sometimes the simple questions are the best. A lead is only somebody who's expressed interest in your product. And it's a marginal level of interest. When I say marginal, it's like it could be just this much, it could be this much. I don't know, but it's usually closer to this than this, all right? I can tell you what a lead is not. A lead is not a sale, guaranteed at least. A lot of leads turn into sales, but many of them don't either. A lot of that depends on you. Guess what? You and your ability to close the sale. Okay. And why is that the case? Well, somebody who is a lead, all they're saying is I might be interested. Okay. I need to know about the carrier. I need to know about the agency. I need to know the agent. I need to know about the premium. I need to know what's the company. There's a lot that has to be handled before they can confidently say, I'll buy. And that only makes sense. That's rational. That's what you or I would do. And that's where we come in as salespeople to take a lead with maybe marginal interest all the way to the end to a sold person who now has a policy and has made us money, right? Your lead focus should be on fresh, quality leads in the long term. Now, we do in our free lead model work agents initially with age leads, and we do at some level have all of our leads or all of our agents work age leads because there's money in them to uncover them. But part of the reason we do that at the beginning, it's easier to teach them on age leads. We've already acquired the cost. They can go do some reps on some live prospects, make some sales, but doesn't cost us as much, frankly. So age leads do have a place, I think, in getting some initial reps for sure. But long term, as you're making sales and are successful, definitely your focus should be on fresh quality leads. People who express interest now are a lot more likely going to buy than an age lead from 5 years ago. Not saying that they wouldn't, but I'll take my chances with a fresh lead over just something that's, many, many years old. Why you must have leads to succeed? Well, because you don't have a business without leads. I mean, it's pretty simple, right? You got to have people to talk to. You're probably not going to cold call. Cold calling is effectively dead. Pretty much everybody's on DNC now. There's very few households with landline phones that aren't on DNC. It's just not a model that's viable. You've got to have leads. That's just the way it is. This is not a referral-based business. It's not a friends and family-based business. It's a lead business. It's just the way it works. Outbound versus inbound. So let's talk about and define both. Outbound leads are leads that call you. Imagine you're sitting in your office in your underwear, and you're waiting for the phone call to come in from a TV lead or some telemarketed lead. And the idea is, the intent's going to be a lot higher because they are calling off of an ad. That's an inbound lead. Excuse me. What I just defined there is an inbound lead. They come into you while you wait on them. Outbound lead is the opposite. You call the person, they answer unexpectedly, and then you go into a sales pitch. So what's better? So for me, I prefer outbound leads because I have control over the inputs. I can usually get more work done with outbound leads than inbound leads because sometimes inbound leads are out of my control. I can't necessarily control the flow as much, and the costs sometimes are pretty prohibitive too as well. I think we'll get into that a little bit more. But for me, I think most agents should be focused on outbound leads because the outbound process teaches you how to sell well, and when you have that skill set, that anytime you can pick up the phone and make a sale, like you're never going to go hungry, right? So it's just such a powerful thing to develop as a first-time agent. What's working in final expense telesales? Let's talk about the strategies on lead gen that are definitely working at the filming of this, which is May 2024. Internet leads. So internet leads are working. I would call internet leads all-encompassing. You could throw social media leads into the mix there too as well, like a Google ad leads. Those sometimes work. Social media is probably the most popular form of marketing. That's what we do at the Dig Agencies, predominantly on Facebook. We're going to start testing TikTok and some other platforms. But these absolutely positively work if you've got a great ad, a great funnel process to collect that information. TV-generated leads absolutely work. There's agents in my agency that have tried TV leads that have complained about them. These are inbound leads where they call you off a TV commercial. I'm not privy to them to start with just because they're more expensive. It's painful to get burned when the $80 lead that you bought doesn't convert versus the $7 or $8 Facebook lead. And I'm not sure the intent is quite better. I think arguably to some extent it can be, but you got to overcome all the same hurdles anyway that somebody calling in on a TV lead does that you would on an outbound lead. That's really what's working. So let's talk about what's not working in the final expense telesales lead space. Telemarketing leads. Please, dear God, never buy telemarketed leads. Telemarketed leads are probably generated overseas by a third world call center that doesn't follow federal DNC guidelines and pans the leads off to you, and you end up getting the lawsuit brought to you by a professional plaintiff alleging a DNC class action lawsuit. Okay, so I don't like telemarketed leads for that reason, and there's just not really any people you can cold call anymore to get those leads generated. You have to use these data leads, and they're likely going to be illegal by the end of the year or 2024 because of the requirements now by the FCC to require one-to-one explicit consent to generate a lead. The data leads are something that have been around for about 7 or 8 years, and they've just blew up the telemarketing space. But that's all going to go away, thankfully. Direct mail for telesales does not work. It's too expensive. A good direct mail lead is going to be $50+ per lead. A quarter of them won't have a phone to call them, so the actual cost is even higher. Just if you're intent on spending that much money for a lead, just buy TV leads or just buy a bunch of Facebook leads. And the non-TV inbound leads. So these would be live transfers that aren't from a television ad. Don't do them for the same reasons for telemarketed leads. They're all generated overseas. They usually don't. The call centers don't follow DNC regulations, and you'll end up getting sued. The most important topic: should you buy leads or get them free? So let's talk about why we do free leads and why most agents should get free leads. So the benefit to buying leads is hopefully you're in an agency that will pay you more because of it versus doing free leads. So that's part of it. Buying leads, you can control, ideally, the quality of the leads. If you know how to self-generate leads on Facebook, you can control the creative, meaning you can control the message that's delivered. You can ensure a higher quality of lead because you're in control of the marketing. That's not quite buying leads. That's self-generating leads, but it's along the same lines. Buying leads, you don't have to know anything about marketing. You can just buy them and go and hopefully get a better commission off the sales. But the reason I'm not a fan of that to the extent that I used to be is really because what I've discovered in the free lead program. More agents are consistent on free lead programs because they don't have the emotions that come from buying leads getting all up in their head. Risking money is an emotional endeavor for most of us, and a lot of people can't do it effectively and curtail their emotions. A lot of people say they can, but I'm here to tell you 90% of you can't. And that's not a jab, it's just reality. And the more emotional you are, the more emotion you get from other people who are close to you, your performance gets affected, all the stuff I've said earlier. This is the benefit a free lead program can provide. You just don't have that pain of wasting potentially your money. You start at zero every week, and you can only make money, not lose it. It's pretty powerful. All right, any questions here? Because we're about to do a little shift here into our script reading. I think we're right on track with the 4-hour live here. Any questions? Will the new federal guidelines affect the volume of sales for free lead agents since summer age? No. No, age leads are fine as long as they are one-to-one consent. So the one-to-one consent is to the agency, us, that has generated them, and our agents represent us. So it's completely fine. Yeah, you can do it with a laptop. It's just harder. That's what I would say. Any questions here? 1 second, guys. I'm going to shift gears here and pull up our script. So now you're probably wondering, okay, Dave, where's the script at? Oops, hold on 1 second. Let me pull up the script, not my email. All right. So if you guys register, I'm going to put this in the chat. If you guys register at Insurance Sales Success, it's going to go in the chat now. You guys can get this million a month script for free, no cost. davidduford.com/ISS, or ISS, excuse me. If you go there, you can register, and then we will get you access momentarily. We will have this telesales script up. I'm actually pulling this up behind me. You probably see the script. And then you guys can download the script. And all you have to do is go to the search bar and put Telesales script up and then look for this, which is, it says new final expense Telesales script here. Okay. So let me get this open. There it is. Okay. So I'm going to switch back here. You should be able to see, I think you should be able to see the script. No, we don't want to do that. So we're going to do a quick reading of the script just to kind of familiarize yourself with what this is about. Yeah, you should be able to see all this. Great. Okay. So let me tell you a little bit about our final expense script here. So this is a script inspired mostly by Tim Hildebrand, our operations and trainer for the Telesales team. He took my script that I taught for years and basically slashed it apart. And what we ended up with is definitely a Telesales script, but one that is more in the vein of much quicker. What normally took, I'd say 20 to 25 minutes to close now takes 10 to 15 minutes. This is a very quick script that gets to the point, doesn't push anybody around, and drives the client quickly to a close. What we discovered doing this script was that our close rate across the board was identical inside of 15 minutes to what it was inside of 30 minutes. And so we were able to increase our presentation rate by day simply because we could get through our script faster versus a longer script. And the benefit to that is that our agents now get to sell more. As part of the reason their sales count is so high is because they're able to pitch faster and get more sales quicker. Does that make sense, everybody? So that's the script. That's the inspiration behind the script. And what we're going to do now is basically just read through it. And I'm going to briefly explain how this stuff works and why we do it. And again, I'm probably going to spend about 20, 30 minutes here. There's a longer video on YouTube if you put in like Final Expense Telesales Deep Dive that goes in the script. Maybe a little bit longer if you feel this is a little short. Okay. So on the open, again, we do outbound, right? So we're calling Facebook leads mostly. They don't expect us to call. So we have to have an opener to get their attention and to keep it. Here it is. Hey, Mildred, this is Dave Duford calling you back on a recorded line with the final expense price quote you requested on Facebook. I literally just saved a guy $43 a month. It's just a few minutes. Is this for yourself or a loved one? So what do we just do there? We're really just explain things really quickly about who we are and what it is that they want and got to the point, right? I can't express enough. We're getting to the point quickly with this script. We're calling about a final expense price quote you request on Facebook. I mean, we tell them it's final expense price quote. We tell them we saved somebody a bunch of money, which we regularly do. We replace a lot of business. So we're helping people save money. That always is an interest perker, right? It's just a few minutes. We're selling the appointment, and then we're asking a question, and a yes question. This is for yourself or a loved one, which helps us progress to get into the questions a little further. Then we start asking some health questions. Are you a smoker or non-smoker? And then say, perfect, it's my job to deliver this quote over the phone about the final expense programs. Now, from this point, we'll either go to the initial questions to determine policy or no policy, which is actually right here. And we ask them, basically, see where it is here. I'm sorry. Where's the part in the script? There it is. Okay. So how long have you been looking for a policy? And then we ask them, do you currently have anything in place? So the reason we ask this part of the policy or this part of the question is because if they have a policy, we spend much less time doing fact-finding or pre-qualifying. It's not that we don't, but we presume if they have one, they already know why they have it, and we don't need to resell them. We can save time on that and then sell them the benefits of why ours is better. And that's why we talk about, are you looking for additional coverage or a lower monthly payment? We've saved a lot of money per month. I'm kind of shortchanging this a little bit. And then, again, we say things like, let's cut to the chase and get this done for you. And then ask them other questions like, is this a 2-year wait? Is this accidental coverage, right? If the client has no coverage, then we ask them, like, wow, is there a reason why you haven't gotten in place? What's been holding you back? More of those pre-qualifying questions to kind of see what their reason why is. Again, the stress here, the point is up here. The idea is to figure out if they've already got a policy, if they have it, and then presume that they don't need me to fact find. They know why they have it, and so we can move on past it. This is now I understand my confusion here. We do have people who object, right, in the beginning of this script, and I want to make sure we talk about how that works. If somebody says or starts to say, I have insurance objection, or people who are hanging up, we have to interrupt them. So they're saying, I have an insurance. Great. That's exactly why I'm calling. Stay on the line. I literally just saved the guy $43 a month. Let me do that for you as well. It's just a few minutes. Are you a smoker or non-smoker? So this interrupt them helps stop them from hanging up, because if they hang up, it's done, or if they start going through the motion. So we have to interrupt them to keep them on the line, to listen, and to try to bait them again with saving them money, and then tell them to stay on the line. Every other objection, I'm busy right now, whatever. Yeah, no problem. I just need a few minutes to get you the pricing you wanted, and what you do with it's totally up to you. I'm not going to try to sell you anything. Just want to get you a quote. So how long have you been looking? And notice we're talking about price. We're talking about quotes. We're talking straightforward about the money here, right? Because we don't want to waste their time. We want to hook them. And the thing with telesales that I found out is different from face-to-face is that you just don't have that much time. They're going to be distracted. They don't want to be pitched, etc. So you got to get to the point, okay? Underwriting section here. So we start to move into underwriting after do a little pre-qualifying on if they have a policy or not. Script goes like this. Okay, so let's get you the price quote here real quick. Again, there's a mention of the price quote. It's all based on age and health. So what's your date of birth? Can I verify your age? Remember, price quote is based on age and health. So do you have any mild or major health concerns? So we ask a broad-based health question. Excuse me. We ask a broad-based health question because, again, it saves time. If they have health questions, they'll bring it up. Very few people blatantly lie about major or mild health issues. And as we get that kind of knockout stuff out of the way, eventually we'll start following up and asking questions like, okay, you're diabetic. Do you take insulin? Do you take pills? Do you have diabetic neuropathy, et cetera? So we go down the list a little bit further as they indicate that they have health issues. Then we introduce ourselves at this point. By the way, if you missed it, my name is David Duford. Obviously, I'm a licensed broker here in Tennessee. My job is to shop all the major insurance companies and get you the qualified lowest monthly price. Lowest monthly price is my absolute obsession for you. Sound good? So again, this is the introduction, who we are, why we're calling, what we're going to do for them, why they should listen. Again, if there's health concerns or if there's no health concerns, we ask about height, weight, please, prescriptions, payment question after that. And then at this point, we have insurance toolkits or Best Plan Pro. We're putting the underwriter in before we pick the carrier. And we ask about payment here because we want to make sure we're drafting the correct account. Some carriers take certain payment methods, others don't. So do you have a valid U.S. bank account? We'll find out if they've got Direct Express at that point or some sort of card to draft. Then it's at this point, we'll ask if they have health concerns. We'll start asking them the follow-up questions. This is also where we build rapport. Like, yeah, my grandma was diabetic. She had insulin. Yeah, it was terrible, right? How's the insulin been? How's the diabetes been for you? So we'll weave in questions on rapport based off of their health here because everybody loves talking about their bad health or their good health for that matter. And it shows that you have some interest in them and it will help relax them. So rapport, you notice, really haven't built a lot of it up to this point, but this is where if you listen to our sales calls like with Jay or Marcus, it starts to really integrate here, okay? Then at this amount, if we know the shopping range, like, hey, I'm paying $100 a month, well, we know what we got to do. We got to beat it, right? So we don't need to ask them this, but if they don't know it, then we ask them this question. Mildred, everyone I work for is on a fixed income, so the goal is to find something that you can qualify and also afford. They have the program sorted in different price ranges, so I need you to tell me what range to start shopping in. Oh, wow, I imagine you don't want this crazy policy at $400 a month. Let's skip that one. So if they are price sensitive, we do not know their price. If they said they are price sensitive, like this, if they say it is in the script, I know you already have some price concerns, so I should start shopping around $80 to $100 a month. And if it's not a certain yes, we move it down. If we do not know the price, now this is just so I know where to start shopping policies for you. So should I start at the 100 to 150 range and then move down from there? So we have this price sensitivity script in here just because if you ask for like 150 to 200 a month, we found people get pissed and hang up. So this is in here kind of to use at your discretion as the agent. If you feel that they're like, man, I'm broke, I'm on fixed income, start here. Now we also, going back a little bit, we want them to understand, we know that they're on a fixed income. That builds rapport. One that they can qualify for and afford, that builds rapport. And we have this price anchor where we don't want this crazy policy at $400 a month, right? Let's skip that one. When you mention the price anchor, it makes everything else sound less. Like you started at $400, but we're starting at $80 to $100. It sounds like we're working hard for them to find them a good deal, right? So that's why we have that. So at that point, we start asking them how much coverage they want to get, and then write the price quotes down, ask them to go write it down with pen and paper. And then in this section, these are the reason whys, like why do you want to get coverage, who you want to try to protect for. I'm just going to skip this in the interest of time. So Mildred, if you do not get a policy, what is going to get stuck with, who's going to get stuck with Bill? Are they going to be your beneficiary? So there's a lot of this stuff that we build when they don't have a policy. Again, if they have a policy, we skip a lot of this. But if they don't have a policy, we want to know this stuff so they can think about this, have some fear, inspire them to buy today, that kind of stuff, right? So at this point, after we get through all that, this is where we demonstrate the product and its differentiation. Okay, here's the price. I just want to make sure we choose the right product for you. You know the difference between term life and whole life. So your coverage is whole life. It never goes up, never cancels due to age or health. And then we go in and close it. Depending on if it's a level policy or a GI to your weight, we're going to explain it differently based off of what's good for the client and what they're qualified for. We have used crank wheel. Some people have said, do you use video or like Zoom? We use crank wheel. It's a way for them to see you on camera without them having to have a camera. That can come in handy if they don't trust you and you need to show them, right, yourself. And then we get into the price. And again, I'm just speeding through here a little bit. And then we show them 3 prices. That's basically our job, to show them 3 prices in the price range we gave me. And then the goal is just to say, my job is just to submit the application, see if we can get you approved. So which one you want to get approval for. And then you shut up, let them work it out, etc. Right? And that's it. So a couple of things here. We're going to go through. So asking for the social security number. Just like every company, they do a medical prescription background check using your social number. So go ahead and hit me with your social number. We don't say social security number. This just sounds a little bit better, right? And I was looking for the objection. Yeah, so objection on social is, I can understand that. Here's the thing, bottom line, you know you need coverage, right? You told me as much, considering how much you wanted to protect your loved ones and give them peace of mind. In order for us to do this, the company has to pull medical records. And and the way every company does it is by using your social. Rest assured, your privacy is 100% safe. If I don't live up to my promise, I'll lose my livelihood. All companies take this stuff very seriously. So what's your social number, right? And it's almost the same thing for the bank account, if you want to read through that. But anyways, I just want to hit on a few of these objections. There's some other stuff in here that's good too, like objections like I need to get off the phone. I have savings. I'm not buying anything today. Can't find my bank info. Like we cover a lot of stuff in here, right? And then the cool down is after they're approved. Then at that point you go ahead and just tell them what they got. Ask them any questions. Is the reason you wouldn't keep this? Keep them on the phone to talk about something other than insurance for 3 to 5 minutes, so they leave with a good feeling for you. Okay. So that was a mouthful. Let's take a moment to see what questions you guys have about the script. Is there anything that you guys want me to cover here? Those of you who are watching live, script-wise. Again, there is a video. If you put in David Duford, final expense, telesales deep dive, that's me holding a phone. We do about an hour and a half of the script, so it's a little bit more detailed. But I'll give you guys a moment if you want to ask questions about the script and how it works. But guys, for those of you who are new, like the purpose of this is really to spend your time reviewing the script, memorizing it, listening to top producer examples over and over and over again, really, and just washing yourself immersing yourself in the script and successful examples of it, right? So that's really the idea here. Okay. So I'll just presume there's no questions. If you guys have them, just throw them out there. But let's continue here. We're going to hit up the kind of last little bit here. Almost done. Thanks for being a good group of people. Yeah, almost done. Okay. All right, so let's put everything together to wrap up this presentation. After this, we're going to do some glossary definitions really quick, and I'll handle any questions you got at the end. Let's put it all together. We've gone through the script just now. We also have covered everything you need to know about joining an agency, getting licensed, the benefits of selling final expense. What is some kind of like summary statements that I would make about this business in order to be successful? Because there's a lot that's uncovered here. This is definitely a video you should watch several times to get used to and get prepared with. So number one, your utmost commitment is critical. Guys, don't do final expense telesales unless you can commit fully to it. This is why we don't take part-timers anymore, because by definition, they're not fully committed. You have to be all in on this business model. If you want the semblance of a chance to have a six-figure income selling final expense over the phone, it needs to be your full-time profession. You need to take this entirely seriously, and you need to be investing 40, 50 plus hours a week. This isn't a get-rich-quick scheme. This business isn't for everybody, and it's not for the faint of heart. But you have to be fully committed if you want any potential for success. You need the commitment of time. Again, 50 plus hours a week is what I would suggest to all of you if you really want to give yourself the best chances of success. You need to have the commitment of focus. Forget the full-time job. Go all into this full-time. Get rid of any other distractions from a work standpoint. Make this your full effort. I recommend selecting 3 to 5 carriers to start with. There's a lot of good carriers out there, so I don't need to necessarily name them, and they change from time to time. But you want to make sure that your carrier selection gives you good underwriting and pricing options, and also there should be a guaranteed issue option too as well to cover people who are otherwise uninsurable. Coachability and humility is a must. Kill the ego. I can't stress enough that our best and top producing agents didn't necessarily start that way. They learned through their mistakes, they asked questions, they got better, and they applied themselves along with their work ethic. They weren't afraid of getting constructive criticism, and they had humility because they knew that learning and improving, even though it was painful to get critiqued, is the way forward. It's the way to improve. Keep things simple, okay? Don't complicate this business. It's so simple, you can complicate it. Just follow the script that we taught today, okay? Just do the lead programs that your agency tells you to. Don't reinvent the wheel. That comes later. Give yourself a year or two before you start thinking some lead system that's better or script is better and trying that. If there's evidence of success and a preponderance of proof of that, just do what they teach. Above all else, apply your newfound knowledge, do your due diligence, and find a partner for life. If you haven't yet chosen an agency, guys, you want to take the time to do the due diligence and research. That's like the reason I have this channel, is to inform and empower you guys. Whether you join the Dig agency or not doesn't bother me. I just want you guys to actually have a long-term career in this business. This business is great. It's done so much for myself and my family, and there's so much failure in the business that it's a shame. And a lot of it can be prevented. Some of it can't. Some of you may not be a good fit for the business, to be frank. But a lot of you are if you have the right setup, the right partnerships, the right everything. And it cannot be overlooked how important that is. And hopefully you realize that by now. So in closing here, thank you very much for watching today's video. Actually, I'm going to come back to this and go into the glossary here because this is not quite ready to close. So in this section, really quickly, I want to go over some common terms and definitions that are used by final expense telesales agents and cover those with you really quick. So if you're new to the business, you're thinking about selling it, this is a really good use for you because it will help you kind of understand different aspects of this business that you usually just find out through exposure and time. A special thanks to Andrea Vargas of ttcleads.com for helping me put this list of glossary together. I actually took their list with their permission and added some stuff, took away some stuff that I thought was important. And just wanted to mention them. Pro tip, they do very good lead options. So if you're interested, ttcleads.com. Okay, let's start with some policy-related definitions and acronyms. Annual premium, just in case you didn't know, that would be the total premium paid for the year to cover the policy. That's what we use to calculate commissions. Monthly bank draft, that is again, the monthly bank draft against the account. Some of these aren't necessarily definitions, they're just clarifications or acronyms to know. ACH usually just refers to a bank draft. IP is issue paid. That's a business that's been approved and issued. Simplified issue means basically there's no medical underwriting. The insurability is determined by typically a phone call or some sort of review of the Medical Information Bureau and prescription check without an exam. Cash value, that's the value of the whole life policy over time that accumulates. Cash value is not something that I really talk about in terms of final expense. It is something that can accumulate after a decade or so, but it's not something that we use to sell that often because it doesn't really grow that great, so I don't really see it as a perk. Direct Express is a form of payment. You'll see it as DE or Direct Express online. This is a checkless checking account. Not all carriers take it, so make sure when you are writing the business, you pick carriers that take it. SSB is Social Security deposit billing. This is where you draft the money on the date the check hits the account, and leads to better persistency because you collect the premium immediately before the client can roll into the ATM and draw it out. DOB, self-explanatory, date of birth. RX is prescriptions. MIB is Medical Information Bureau. That is a place in Braintree, or Brainerd, I think it's Braintree, Boston, Massachusetts, that has all of our information assigned by Social Security on any claims we made against our health insurance. Most health insurance companies participate in it, and it's a way for insurance companies to check against risk. Is this person somebody I can trust to take on, that their health is actually what they say it is? So all carriers, for the most part, do an MIB or Medical Information Bureau check. Level coverage means first day full natural and accidental death. Preferred and standard means a rate class. Standard's usually more expensive than preferred. Graded and modified means partial coverage for the final expense product typically for the first 2 years. Sometimes it's just a return of premium, meaning the money comes back plus interest, or it's a stair-step graded plan where a percentage of the face amount is paid out, like 30% first year, 70% second year, then full coverage in the third year and beyond. Double indemnity, some policies offer that where if they die by accident, the face amount or the amount of coverage doubles. So if you had a $10,000 plan and they died in a car wreck, $20,000 would pay out. FE refers, or FEX refers to final expense. MP is mortgage protection. That's basically a non-medical term product used to cover the cost of a mortgage or the mortgage balance if a loved one dies prematurely. Whole life, we know what that is. Term life is just coverage for a set period of time before it cancels, or at typically a level premium that never goes up. Universal life is like a combination between whole life and term. You can design it where it lasts your whole life if it's designed properly, or it can be designed like a term plan. So it's flexible, sometimes called flexible adjustable life insurance. You'll see it mostly nowadays with index universal life plans, which are ULs that are tied to an index, so they have the ability to grow the cash value account tax-free. GUL, not much seen anymore. Guaranteed universal life plan. They act like whole life insurance, but with a guaranteed premium as long as it's paid on time. Index universal life, talked about that. GI is guaranteed issue, no questions asked. Whole life insurance, most guaranteed issues, almost always a whole life plan. P&C is property and casualty, car insurance, home insurance, etc. Return of premium is basically if the client dies within the first 2 years, that the beneficiary gets the money back, plus a level of interest, 5%, 10%, something like that. AD&D is accidental death and dismemberment. So this is accidental death. If you die or if you lose a limb, some form of financial benefit pays out. Agent-related acronyms and definitions. LOA can mean license-only agent or line of authority. That generally means that the commissions are paid to the agency, not the agent directly. We talked about that earlier and what the implications are. Vested means that you own your book of business. Non-vested means you don't. Typically in most carrier or contracts or agency contracts, if they have a non-vested period, it's for, I've seen them for 2 years, 3 years. I've seen one take 10 years. So it's all over across the board. The ideal is to be in an agency where you're fully vested, assuming you're paying for leads for sure. Sometimes if you're getting free leads, it can be justified if you're not vested. Release means getting a request to move your carrier contracts from your your current agency to a new one. Maybe you're not happy. You're doing a shift in strategy. You want to make sure before you join any agency you can get a release as long as you don't owe any debt. Captive means that you are owned by an agency, typically with one carrier product, and you can only sell for that company. Independent means you can sell multiple carriers and sometimes work with multiple agencies. Agency acronyms definitions. MLM means multi-level marketing. Simply put, that is the strategy that's the norm in the life insurance business. I would define this as agencies that are trying to monetize you, not off the sale of selling insurance, but off of buying leads or using your friends and family to sell insurance to, or just simply getting you to recruit instead of sell. IMO means independent marketing organization, not included in there, unfortunately. That is a large organization that typically has other agencies underneath it that then recruit agents. Okay. FMO is a field marketing organization, typically a smaller version of an IMO. A national marketing organization is the biggest, that they've got a huge distribution. They've got IMOs, FMOs, and agencies underneath them. There's only a few of those. F2F means face-to-face, selling face-to-face. B2B means business-to-business. Not really applicable to final expense. We don't sell much business-to-business. Lead acronyms. FB leads is Facebook leads. DM is direct mail. LT is live transfers. Live transfers are either TV leads or leads generated from telemarketing to transfer to the agent. ROI means return on investment. For every dollar you put into your leads, how many dollars you get back. That's what you're measuring there. CPL refers to cost per lead. It's very important because you want to know the average cost per lead that your creative is generating if you're buying leads. But really the most important is CPA, cost per acquisition. You could conceivably have a high CPL. You could have two CPLs, one high and one low, but the CPA is actually lower with the higher priced one than it is with the lower one. You can get cheap leads that are harder to close, in other words. So with CPA, that's really the ultimate goal. You want to drive your CPA down as much as possible so that your acquisition is that much more profitable. Compliance-related definitions and acronyms. HIPAA means Health Insurance Portability and Accountability Act. That's just basically your information and consent. You'll see it a lot with signing applications that the client consents to release their health information. CE is continuing education. Every 2 years, you have to upgrade or update your licensing, and they require CE. I like webce.com, easiest and fastest way to get CEs out of the way, continuing education out of the way, and cheap too. DOI is Department of Insurance. Every state has its own Department of Insurance. They're the ones that decide who gets appointed as an agent, who gets their license revoked, handles disputes between clients and carriers and agencies. DNC means do not call. If you ever get anybody that's on a do not call list, never call them. TCPA means Telephone Consumer Protection Act. All of this is going to be more viable as you get up and running. There are restrictions on how to generate leads, one-to-one consent, making sure that your leads are legit. Agent tools, definitions, and acronyms. ITK, insurance toolkits, and BPP, Best Plan Pro, both underwriting and pricing calculators. Very good tools to have. Very affordable to purchase and a must-have as a final expense agent. CRM is customer relationship management. These are your ways that you store your client information, leads, follow-ups, etc. And then ttcleads.com. Use Duford 15 or Duford to buy leads from them for final expense for telesales. They're very good at what they do. All right, so thanks for watching. But before you go, I have to shamelessly plug myself. I'm not very good at it, so let me go ahead and do it real quick. As you saw, I started to, but I had all the stuff to get through. So thank you so much for watching. In closing, guys, if you're interested in learning more about the Dig Agency, go to davidduford.com. We recruit agents in the telesales space. Most of our recruits now are on the free lead program. Agents love it because they don't have any risk at all. They just buy lead, or they just sell, and we worry about buying the leads for them, and they just worry about selling them. It's great. The training is fantastic. The mentorship is awesome. There's so many great producers, not just on the free lead side, but the broker side, that will help you. So many videos to watch of live producer calls, everything that you need to be successful. That's what we're about on the telesales side. I highly recommend, if you're looking for a home, maybe you're not even quite licensed yet, but thinking about this, check us out, davidduford.com. There's an overview video on that page. It will take you through the opportunity that we have so you can see if it's a good fit for you. And then below that, there's some FAQ videos that go into further elaboration on some of the finer tuned questions about specifically what commissions are, face-to-face versus telesales, free leads versus buying your own leads, licensing requirements, what states that you need. Everything is there. You'll also see the testimonial section. We have a preponderance of proof from case studies to written testimonials from agents successful with us that are happy with what they do with us. And then if you like what you see, you can come to a live Q&A call. We do them a couple times a week. We'll answer your questions live with our staff, and then you can apply after that. And then we do an application interview process. We're not like everybody else that recruits anybody with a pulse. We want to make sure, as I've mentioned earlier, that everybody we bring on is a great fit for the Dig Agency, fits our culture. We need to have a mutual match. And I think rushing into love too quickly is a great way to cause all sorts of unnecessary problems. So we have a little slower process onboarding. It's not too slow, but it is specific because we care about your success and making sure that it's a mutual fit. So ladies and gentlemen, thank you so much for being here. I'll open this up for any questions here as we wrap it up, and we'll be done. All right. Yeah, once you go to that training site, you'll find it, the person who asked the question in the chat. Actually, yeah, you're actually right. I will do it. Hold on one second. So the link is, forgot I could do that. Link to script is here. You'll need to sign up for a free account first. Okay. So yeah, I got that in the chat. You'll have to sign up for account first, Eric, but it's free. And then click that and I'll take you there. All right. What do we say if we ask what is your company name? So for me, I mean, we're going to implement once this one-to-one consent goes through that, hey, I'm Dave Duford. I'm with the Dig Agency. So that's what you would say there. You could also opt to say, yeah, I'm an independent agent. I operate with companies like Mutual of Omaha, Gerber. You probably heard of those, right? You know, mention the companies you work with, and that'll be sufficient. It doesn't get asked a lot. Let's see here. Do agents state we are working for the Dig Agency? They will eventually. That's the script. Are we going to record? Yep. Do your agents use your own custom CRM or third party? Yeah, it's custom CRM, JD, for sure. Could you put the link in the chat for the script? You got it? Oh, by the way, guys, if you're still watching this and you like this, please hit the like button. That kind of helps elevate this video a little further so more people watch it. I forgot to remind everybody of that a million times. Thank you so much, Mr. Duford. You really put together a great presentation. Thank you very much. I'm glad. Thanks for sticking with me, Dom. Thank you, Laura. Yeah, I mean, wits, not necessarily. I think you should ask relevant questions now. I think you can do both simultaneously. You should be asking these questions because what ends up happening is most people don't do that. And they have an incomplete vision of what the business is really like. And then they get into trouble. So, you know, that's why this exists. You're welcome, Patricia. Thank you very much for this excellent presentation. Thank you, Nelly. Glad to have you. All right, you got it, guys. Yeah, Barbara. So the link you're on, so every spam email you got from me promoting this, just open one of those back up and then click the link, and then you can watch the whole thing over again. Like the link you're watching on is the recording. Does that make sense? So you don't need to like wait to get the new one. Just go back and click the link and watch it, and you can watch it from start to finish. Okay. Ladies and gentlemen, thank you so much for being here. Again, I appreciate your time. Go to the Dig Agency at davidduford.com if you're interested in learning more about what we do and consider joining. Thank you so much. We'll see you next time. Y'all take care. Peace.